Wait, day 8 since they kicked off the campaign. 8 days in, and like, man, I guess we can discuss that somewhat a little bit too, because it's of course it does have something to do with the markets in a lot of ways too. It affects the markets, but on a precision value, as much as America's kind of up in arms, and the NATO allies and all this stuff is up in arms, but it seems to be that whatever Putin is doing, it don't seem to be as I should say raggedy and ratchet as some of the stuff we witnessing on our side sometimes. So again, it's weird when the pot talk about the kettle, but anyway, we'll let that handle itself. All right, so shout out again to the family, Peace, Power, and Profit. This is our Thursday training session. Of course, needs no introduction, but we will definitely say it for the airways again, because it will be recorded on YouTube. Appreciate the family over there that may come in and pay homage or just follow along. We appreciate you guys' view as well. All right, so as you see, or may have seen within the link, speaking about indicators and oscillators, right? Speaking about understanding the value of trends, right? When markets are in trends. Again, some of this stuff is like not new to a lot of you guys, and we understand that a lot of you guys are definitely well endowed to be able to break down what the indicator is, what is an oscillator, how to map out a trend. What's going on, family? Mateo, brother Mateo, trade in the building on the YouTube side. Happy to have you in the house, family. All right. So again, it's no stranger to you guys when it comes to understanding trends. Again, indicators, oscillators, in terms of what they read out. And as we know, the markets as a whole, when you look at a chart, I like to put a lot of different examples to thought when I think about a chart, somewhat like a concert, right, or concerto, right? All the different instruments or musicians, whatever, coming together to kind of produce a beautiful sound, right, or some beautiful music, so to speak. And that can only be realized once, when everybody's on tune, right? Or as they say, on chord, right? For my, my band, people in the house, whoever may have been down that road at some point. So, markets are, in a lot of ways, of course, it plays a lot of rock music sometimes. It's just all over the place. Sometimes you got some, smooth jazz, and sometimes you got some good hip hop, right? Some R&B, I mean, whatever that genre is, right? That what they call electronic. Well, I don't know what that stuff called. Electric music, something, punk rock or something. But the markets are dealing with all these different variables, of course, sometimes, and and being able to fine tune it to your liking. That's the great thing about it, because you can always change the channel, right? Same way you could do on your FM, AM dial, whatever. You could change the tune of the music if it doesn't necessarily suit your ears. And someone said, well, what do you mean by that? Of course, when we're thinking about indicators and oscillators, right, what are they really trying to convey? Right, they're giving you a optical message, for one, right? For one. Number two, they're there to provide again, guidelines and grid lines for what containing the money, right? I guess the most simplest way of putting it, right, is they're there to kind of keep the money in line, right? Keep everything dressed, even when it's, making erratic moves up and down all over the place. It's still signaling a lot of different things in that moment, right? So for us, of course, for a lot of you all, of course, like I said, are very well advanced in understanding the values and the basic, perspectives when it comes to, charting, affectionately known as technical analysis. But a lot of times, we need to, remind ourselves of some of the more basic things that helps us, right? That helps us see some, some intricate aspects of the market that sometimes it'll throw you off when you get caught into all the, the daily chatter, right? Some would say FUD or whatever. With, dealing with a climate like we're dealing with now, with the geopolitics of just, running rampant. It's hard to stay poised and patient with your game plan. And this is the test of people's resolve right now. And I think this is really good, because it's a lesson. These are the type of lessons. All right, I'm getting my camera open. Okay. These are the type of lessons here that are going to follow us, right? Well into our career. Why? Because we're getting firsthand experience in terms of how markets react to certain things, right? How markets react to, war, right? Be it ours or someone else's indirectly, but we got our hands in the mix because we sanction in this and that. And, it's causing our market destabilization because, again, a part of their markets now that's disrupted affects our markets indirectly, right? And we are already dealing with what problems because we got inflation, economic issues, whatever. The job market is still trying to, get back to some form of equal footing. I mean, the virus, the whole nine, right? We know the whole, the whole gauntlet of things that we're dealing with here. So again, going back to a place where we can still, take some good old fashioned technical analysis and mapping out the market, among a lot of things that we've already discussed and we've, been discussing religiously, throughout, our, tenure at this stuff and trying to figure out how to be the best at this, so to speak. There are going to be moments when you're going to revisit certain things about your, certain things within your, I should say, your repertoire that you will, find solace in, and it'll help you again be able to deal with, when everyone's, thinking this way or someone may not be thinking this way. The market may be giving you mixed signals. Of course, the best thing you could do is just sit on the sidelines, right? If the market is giving you too many, signals that are not registering with your setup, then the best thing you could do is just don't even take the trade, right? I'm actually proof positive of that today because I had a moment where I was doing some things and I know I probably shouldn't have tried to place a trade at one point. And my focus was not necessarily like it normally would be on the average when I'm trying to just really lazy on some money. And I took a trade that was very adverse value based upon it. It was more so on a whim than it was my usual setup scenarios, what I do. And like for many people who've done that sometime, let me see what this trade does. Let me see what it's going to do, right? I'm seeing it's, shaking out up here at this particular point on the chart, whatever. Okay, we might have some, some opportunity here, right? So it was actually early in the AM, right? We had a massive gap up, as you guys probably saw. I sent it up and I was like, we broke it to the new channel, right? So we know that new channel is going to be above 440. Now, closing above was going to be something else. But I took it for the ideal of the scalp because I was like, you know what, these people, they played the market all throughout the, futures market session, so to speak, just kept it kind of somewhat sublime, not necessarily selling off, not necessarily just breaking out. They're just holding support, right? Of course, we can see that coming from the previous day. Why? Look where we came from. We're in this channel here. Let me break out my market here, guys. Forgive me here. We were in this channel here, essentially, just, after a massive run up the previous day. And we just kind of stayed within that consolidation channel pretty much, the closing of the market yesterday coming into, pre-market and then beginning of the session today. And I said, you know what, if nothing else, okay, they're really trying to, test the higher end of this channel that we're in. If they break out, they're fortunate to break out, weighing the ideals of all the things that were on the table for us, the fundamental catalyst, right? We had Jerome Powell speaking again before the Senate committee, right? Of course, the old hawks that were, questioning them today was a lot different than the House of Representatives, chicken hawks that were, questioning him yesterday. He got grilled today in the right way. And they did it, from a place of wisdom. And, again, y'all know how the politicians are. They get them phone calls like we already know from people saying, hey, what's the deal with this inflation? So they gave it to him straight and narrow. But nonetheless, the market had already got what they feel like they needed from him yesterday by, plucking him or pushing him, so to speak, or pricking at him to go ahead and signal what kind of rate hike he's going to do. So he revealed his hand yesterday. I think I posted about it. He revealed his hand that they're going to do a 25-point, rate hike, right? We know the 50-point was somewhat just basically off the table based upon the odds that were out there. I think Oprah Chris put some good data out on that as well. Many of you all, you guys as well was already on top of that. We kind of somewhat talked about it a little bit in passing, the variables within that. So that 25 basis point was enough to signal to Wall Street, okay, well, hey, we kind of already knew that it was going to be the case because, again, we're dealing with a war scenario, right? The adverse effect to their markets spilling over into ours. That's problematic for rate hikes, right? Now, neither here nor there. doesn't change the fact that inflation is still raging, right? Doesn't change the fact that, commodity markets are very unstable, even more so now because of this situation. So again, inadvertently, that's going to make more of a bigger problem down the road than them trying to act like, okay, well, yeah, we may not do a half a basis point now, which in a lot of ways will signal the ideal of maybe we might be, creeping into the ideal of what the recession may really start to feel like at some point by putting that shock on the market and pulling back all that extra liquidity that's happening through QE. But just the idea of the rate hikes alone will shock the markets. Why? Because it'll make people freeze up and start thinking like, do I want to take out, this loan? Do I want to apply for this, financing for this car, whatever? And so people become more conservative as rates go up, as it's supposed to be. That's the whole point of it. It's a shocking our theory, or it's actually not even really a theory. It becomes law in a lot of ways, because now you have to plan for, again, paying more money in a tax, so to speak, than you are right now when it's just been basically at zero and everybody's been partying in the streets, credit this, credit that. But it forces you psychologically to be more prudent in your spending. Essentially, markets hate that. Why? Because markets thrive off liquidity. It thrives off stimulus. It thrives off people spending money. And when those things on the luxury side of spending does not necessarily equate to good, balance sheets for Apple and these different companies out there, Best Buy, Foot Locker, whatever, then yeah, you will see that in the market where it'll, finally begin to rein in some of all this having so many dollars chasing fewer goods, so to speak, right? Which obviously is somewhat, the definition of the idea of what inflation, is born from, right? People become more conservative. Now, what does that have to do with everything we're going to talk about this evening? Well, it has a lot to do with it, because it's about, again, being able to compartmentalize what's actually happening in real time. So just going back to even now, I was talking about that little trade I took right when we got ready to break out, that first candle that I saw, that big old, bullish engulfing green candle. I said, okay, now if they're going to make that push here based upon continuation from yesterday, Jay Powell, whatever, we're already at the top of the trend, right? We're already at the top of the trend, right? So they're going to have to barbecue a mildew, because again, today is not an expiration, on for contracts for all to SPY. So you didn't really got to worry about the algos, and the market makers really just trying to throw the market in a frenzy. Now, the best thing they could do is just try to do like they typically do. They'll just kill all the options as they could, right? 30 burn, right? Which is typical when you have a lot of different moving parts that are affecting, clear trends, outright, so to speak. I'll say it that way. And what do I mean by that? Basically, when the markets are in limbo and a lot of things that are, again, the market's kind of like, whoa, we want to ride, but we got to pump our brakes. That's what I'm talking about. That's when the market makers really, really just throw everything they can to market to mess up a lot of the options. So essentially, coming off that consolidation that we saw the previous day into the after hour session, into the pre-market, you look at that, that's a bull flag, right? Clear as day, right? It's no rocket science here when you look at this here. And we see how it played off. Again, this red line is the actual VWAP. The blue line is the 20-day moving average. Just put some context to that, since we're going to speak about indicators a little bit here today. We were pretty much stable, right? We came into the market pretty much stable, even though we kind of gave up the peak here the previous day, but it came down flat line at that point of the VWAP where it consolidated, and it just stayed like that pretty much for the rest of that, after hour session, and chopped out right into the pre-market. So when I see things like that, okay, that's a flag. They flagging it, right? We get it. I get it, right? That's good old bull flag, right? We get it. So I say, if they're gonna test the trend today, we're gonna break out, go into the next, the next 10 point trend, then so be it, right? So using my indicators, of course, as a guideline or grid line, whatever, essentially right at the beginning here. Let me clear this stuff off. Do this in real time here. Blow this up here. In the beginning here, as you can see here, I'm just using this small chart till we get to the big ones, of course. Right out, from the 9 o'clock hour, of course, you had, massive volume coming in. Of course, that's how they always get you, right? Pre-market, and we spazzed up here. went up as high as like what was that? Yeah, where is that one? I need to focus in on that a little bit more. I don't know why I'm just playing around with this charts. I know I need to be over there on TradingView. But anyway, this guy right here, right, came in at 8:55, then hit the 9 o'clock scenario here, right? And so into the ideal of the pullback off this flag, this gap up, well, not gap up, but this big momentum run early pre-market, as if we got some news out of Russia that's a ceasefire. All we knew today was that they was going to do a peace talk, right? We knew that much coming in today. It was round two of the peace talks, right? So we pull back, of course, right around the VWAP, right at the point of the 20 moving average that you see here. The 20 moving average here actually crossed over the VWAP, which somewhat when you have a cross like that too with the VWAPs, even though people rarely talk about a moving average crossing over a VWAP as opposed to a moving average crossing over another moving average. But of course, it still signals the ideal of what, a rate of change, so to speak, in a lot of ways, right? So, kind of right at that perspective there, when we had that initial pullback, I said, okay, here's going to be here's the pullback before we get ready to make a run, right? So right at the, at the open, we came back, not necessarily consolidated, but we hit that pivot point around 439 and change. And then we had a nice spaz up, right? Back above, well, at least that, opening price point, we got like 440, near 441, right? But 440, of course, that being the top end of a trend band. We think about these 10-point channels. I said, okay, well, they're breaking into a new channel, then let's go. But again, like I'm always telling people, we have to close, right? We have to close above those new channels or close above that new moving average. And my thesis that I use is the 5-minute rule, right? We have to close above that channel for at least one 5-minute candle or 5 1-minute candles, and have a direction of bullish, stance within that closing, right? You can't be, falling into that 5-minute time frame, back into that, that trend or that top of that channel and hold value and thinking people just going to show up. So I took the cardinal sin in my own right, thinking that, okay, yeah, we might have fell back into that. Same thing I'm saying now, we fell back into it. But I said we should get a nice balance because that VWAP here was somewhat still almost in a plane, right? It was kind of like, barely, it wasn't, kind of had that little U-shaped back bottom. It had more of a hump shaped top, right? So it's kind of still, signaling that it's trying to show a bullish stance, right? But nonetheless, of course, it failed miserably, right? It failed miserably. Now, I'm speaking about this because the fact that I did not have my stop loss on. And I typically do that right away, but it was like the beginning of the bell. And I got other positions I'm starting to look at. I got other stuff I'm looking at. And I made that cardinal sin because at that moment, I thought I was trusting the indicators enough to give me that, that confirmation signal that we might be moving to a new trend, even though I still was like, hey, be cautious. I think I put out notes in the group this morning too. And I was like, yeah, just, but be cautious there because, we got the Fed speaking, all this stuff like that. Anyway, but that's what I was doing. I was trusting the indicators, and it didn't serve me well at that moment because of the fact, again, I didn't have my stop loss on at that point. So the market just completely gave up the ghost. We retraced the entire move of the pre-market, as you see, and we blew past that and came all the way back down to that 434 pivot point. Now, interesting about the 434 pivot point. Now we move to the bigger charts. Get off this old tiny little chart here. All right, let's get to the big stuff here. What was interesting about it was, let me come here, was that, we already had kind of put the market into, that bubble, right? That ideal of a box, right? I call it the kill box. Some people call, whatever they want, whatever, works for you, of course, in that regard. But, I call it a kill box or a channel or, just a box, period, right? So looking at this here on the daily chart, first out the gate, we were literally sitting right at the 200 moving average, coming from yesterday where we got up there, and we closed literally at 437.89. I mean, literally a few cents off 438, right? And just looking at that 200 moving average here, today is sitting at 437.54. Why? Because it dipped a little bit as of today because the market pulled back into today, even though it broke higher and tested the top of the trend band. As you see this line I have up here, let me draw a line on that. and put some breakers on there, as they say, right? So it was a fool's gold kind of pump, right? I mean, but it wasn't necessarily, right? Because they took it to the top of the trend, right? They took it to the top of the trend band. I was like, okay, yeah, yo, I've seen this a lot of times, right? It's nothing new to me. Like, brother, you know what's going on here. Yeah, you know, if we can't get that close above that top of that band there, again, 5 minutes, 1 minute, excuse me, 1 5 minute candle or 5 1 minute candles close above it with at least a bullish, stance at that point, not necessarily falling into it, but just kind of hovering above it, then yeah, it's going to be suspect, right? Because again, Powell is speaking, getting ready to speak, so to speak, or whatever, all this stuff. So yeah, I'm weighing all the variables. But I knew in that moment, like my intuition was telling me, bro, do what you do best. In moments like this, when you spot these pivot points, right? It would be the same when we was thinking about buying calls down here. We I was successful doing that several times. You guys were as well. And it was the same thing here because that was literally the top of the trend band. I mean, it's a 20-point window, right? The 420, or well, yeah, if you want to call it the 420 level at this point, we know that was the gap fill lines you see here. We got the gap fill line scenario. And then top up here was, again, at around, old resistance points. You got these guys here, you got these guys here, right? You got this guy here. We knew with all intents and purposes, that's going to be a massive resistance. No harm, no foul. Even when you blow past a little bit, and that sometimes it gets people caught up because they'll think, well, it's supposed to hit right at that point and just fall. Not always, right? Markets will definitely blow through resistance points. It'll blow through support points and then retrace back at some point, right? So it's not an exact science. Is what we have to take into consideration. But nonetheless, that was the reality. Why? Because again, I was also supposed to be trusting my indicators. Now, if you guys look on the screen right here, all right, whether you know which moving average it is or not, but what's the most, and you guys can, do like we always do here, because we are in a training session here. If you get able to go to your markers or your pen or your annotate button on your screen here, if you guys will, somebody draw me a line to the indicator that was telling me that the market's finna slam on the brakes at that current time. Now, we know that this candle right here is the most current candle, right? Because this is on the daily chart. Somebody draw me the most effective moving average, or point to the most effective moving average up here on my chart here, whether you know what it is or not, that showed you that the market's getting ready to slam on the brakes. Anybody jump on in there and just draw that or signal towards it, or just what you got? Anybody? I know it may take a little moment for some of you guys, like figure this stuff out, but you should be able to find on your annotate tab.
I wasn't looking at what you said at what part? I mean, at what
show
point?
me the resistance that this that the market was getting ready to hit a point of resistance. What gave us the indication that the market was getting ready to hit that resistance? And again, at that point, we following the rules of engagement as what the indicators are telling us and teaching us, right? Right. Which indicator would that be on the screen if you had to point to it? Right. If you could draw it over David, we got over David already on the screen.
Would it be the double bottom or no?
No, we're talking about indicator. We're speaking about indicators today. We're trying to map out the intent, the intent of the indicators. So which indicator do you see up here, whether you know which number it is not, but what shows you a massive point of resistance?
Where it hits the Bollinger.
Right. Well, obviously, yeah, I don't have the Bollinger Bands up, but if you would say,
that's not a Bollinger. What is the blue line right there?
All right, there you go. So you see it from the place of just the indicator itself, the color. So that's a 20-day moving average to be exact. Like I said, I didn't disclose which number it was, like 29, 50, whatever. But just the idea of your visual perspective here, when you look at this chart, because you dead on it over Sunday too. Your eyes weren't lying to you, just didn't know the numbers, right? That's exactly. And Ober David had, he definitely pointed out, he's already drawn up there which one, right? Now, for a lot of people, they will be like, okay, yeah, I might have known that. It looks like it. And some people, it might have been confusing. Well, this is the importance of understanding the idea when we say trust your indicators, right? When you see things, giving you a signal as it's supposed to be, the first thing you should think about when when you see markets are effectively, propagating these kind of signals, the first thing you should think about is what? Risk versus reward. Why? Because as a trader, as an investor, we're spending majority of our time diagramming what? Risk. And what would be the value of the reward if we were able to take on that risk in that moment, right? Depends on what the stock is at in that moment on the chart, right? Depends on what kind of catalyst that may be driving it, right? Newsworthy, whatever. And a lot of ways when we're thinking optical, we're talking about what? Visualizing it on the screen or on the chart. The importance of the indicators is there to what? To give you those, again, like I call them what? Guidelines and grid lines. Training wheels. Essentially, you're putting training wheels on your chart. So that's a major moving average that most people definitely use on a daily perspective, right? Of course, I use it. Not that everybody has to use it, but the 20 is something that I always use. I day trade with it, excuse me, and I also do a daily, analysis through my charting with it. Why? Because it really does signal, that rolling time frame within that 714 on the RSI, the idea of a MACD when the impressions are changing sometimes. A good 20-day period always gives you a good, summation, so to speak, of where markets are, how effective markets are moving, I should say. And so going back to our old thesis, right? Go ahead, Obadiah, you got your hand up?
Yeah, also, one thing that I noticed in the pre-market this morning was on the daily chart, the 20 was crossing over the 200.
All right. So, and interesting too, because, I'm on my daily chart right now. And so just looking at it here, where it's almost paralleling a little bit, just from this perspective, right? Because the 200 would be this yellow right here where it says EMA over here. If you look over to the right-hand side, that's my 200-day moving average marker, right? Or marquee point on the chart. This one here, obviously, is the 20-day moving average, right? If you look at this and say to yourself, okay, we're starting to get, that somewhat, we're starting to kind of really converge on one another, right? Which is not necessarily the best thing if you're trying to, I guess read, bullish sentiment, or it could be inverse bearish sentiment, right? Because anytime you have moving averages, converging on one another, especially a short term, coming up on a long term, that's necessarily not good. Why? Right? Why is a short term indicator converging on a longer term indicator not necessarily a good thing? Anybody want to tackle that?
Trend
you have
reversal.
A short term. Go ahead. Somebody about to say something.
Trend reversal.
Right. Base case trend reversal, right? Because at that point, it could definitely be coming up on a trend reversal. What else, right? Any other, ideas come to mind when you think about a short-term moving average converging on a longer term? What else? We definitely got trend reversal. What else? What else may come to mind when you think about that? Right. So let me just go. Matter of fact, let me just put this at that blue line so we know what it is. So that blue one is the 20 moving average, right? It is a 20 MA, right? The yellow one here, or the thick yellow line here, that's the 200, right? That's the 200, right? So put that there, right? But what else comes to mind, guys, when you think about that, right? When a short-term moving average is starting to converge on a longer time frame. As you see here, this thing is sloping to the downside. Clearly, this 20 moving average is sloping to the downside. What else do you think about when you see that? All right, just a basic sell signal. So we got sell signals, right? Sell signals, right? We got what? Trend reversal, right? That's over there to get trend reversal, right? We got, let me see what else we got. Anybody got anything else? Anybody got anything else? What else do you see here? What stands out? Any kind of idea of something to thought that may come to mind? And I'll take a stab at it. So I'll throw in a few. So of course, if you are a person who, I guess roll underneath that ideal of supply and demand zones, right? Clearly you have in this moment a supply zone, you have a supply zone moment here, right? So a supply zone moment will be considered, like we've discussed many times. We have an exhaustion of what? Buyers, right? Now it could be short term, it could be, pretty substantial for, an outright reversal, right? Right. It wavers, right? But however, again, this is the idea of where we had this kind of pinch, right? You had 20 coming down, converging down on that, raining down on that 200 moving average here, right? Which at this little, this little white line here, of course, this little arrow here. And you literally to the T, let me see. I know I should just did this a long time ago. Let me do this here. All right, let's blow this up a little bit more. All right, let's blow this up here. All right, for the sake of what we're talking about here. Let's blow this up here. I mean, literally to the T, right? What do you see with that wick right there? It literally kissed it, right? I mean, to the T, and instantly got rejected, right? So much so that it provided that shadow, right? As small as it is, but it was enough to kick the market, right? It was enough to kick the market to the downside, or at least start that downside, push based upon tapping that big old moving average there, that 20 in this case on the daily here, breaking below the trend band. I was at the 440 point, which was what we were looking at in terms of it. Okay, you got to hold the line here. If you don't hold the line here, it's 440, then we're not going to make a new trend, right? Right. That was simply the game plan. So again, indicators here told you 100 times, right? I would say 100-fold value that, hey, this is a moment to do what? Take profit if you've already swung calls into today, or right, do like we were discussing, understand all the things we're talking about, supply zone, sell signal, trend reversal, and buy you some puts. Clear as day. Why? Because going back to what we're talking about, your risk versus reward reality here, the risk versus reward ratio puts you at a what? Low probability of risk. Why? Because in order for the market to break any higher from there, you're just going to need, again, as some would say, the right hand of what? Of the maker, right? To come down and really just guide you on up into that next channel. Like, oh, everything is fine. No problem, right? Again, we still got Rush on the table. We got this Jerome Powell speaking. We got, market still digesting, the idea of a quarter basis point rate hike when we knew that they was going to do that. We kind of already knew that the 50 was off the table going into before Powell spoke. So people can't play that, naive role like, oh, I didn't know that. They kind of knew. That's why they start front running the market before Powell even came to Washington, or, going to the Capitol Hill, at least up there. But nonetheless, all these things were already kind of permeating throughout the markets, and the market was just front running it. Why? Because they already had the State of the Union with Joe Biden. That was another, front run, scenario in itself. So yeah, good old fashioned blow off top perspective that we got out the market today. Neither here nor there. We're still sitting up at the upper end of the channel here, around 436, 437, and it's still suspect, right? It may try to make another run at tomorrow, but here's where it gets interesting. If you're day trading the markets and people like, well, man, some people come like, man, how you be catching them pivots like that? How you be timing them pivots? Like, I'm not timing it. I'm just trusting my what? What am I trusting when I'm catching these pivots? Anybody? What are we all trusting when we catching pivots?
Look at the supply and demand zones.
Right, supply demand zone. What else?
You support and resistance where it's about to pivot, where it's just hitting up against the resistance or
right. Support resistance pivot points. All right. More technically, what else? What are you seeing in that moment? If you could,
your EMAs or SMAs.
There you go. Right, the EMAs, right, the SMA or EMAs, right, exponential or simple moving average, right. They're telling you again, if we're going to trust these indicators, right, then what are they there for? What are they not? What are they not there for if we're not going to trust them, right? They're there to be what? Utilized for this perspective, right? Brother Go said analysis, right? Right. That's what they're there for. Now, clear as day, again, this is not a, one thing I love about the markets, because again, especially when you do your recon or your hindsight, overview or back testing. Now in real time, when this is happening, ain't nothing different here, right? This is a record of history here, right? Y'all know that's why we love this stuff. This stuff is recorded, right? It's recorded, right? It's record of history here. And you wicked right at that moving average here, clearly, and got rejected. And the market obviously pull back off it violently. That's what left that shadow there, that indecisive there. A lot of traders felt very indecisive when we got up there and it got rejected. Clearly, Montombo, get that out of here, right? Or whoever your favorite shot blocker is, right? Tracy McGrady, not Tracy McGrady. What his name is? I forgot. What the Superman guy? I even messed the guy's name up. Y'all know him too much. Play for the Lakers now. They don't play for the Lakers now. He plays for Houston, but guy out of Georgia.
Howard.
Yeah, that's his name. God, dog. Dwight Howard.
Dwight Howard.
Yeah, see, I let y'all know, but I'm rested, but I ain't watched no sports in so long. Don't come for me, guys. Don't come for me. But no, that was clearly a rejection here. And we're talking about risk versus reward. We're talking about trusting your indicators, right? Trusting the ideal of what that looks like, especially if you're looking at the different time frame, because as investors, if you're day trade the market, we want to look at all time frames as much as possible while we're engaging, especially a high profile type of trade. And of course, when you're trading the SPY, I would consider the SPY definitely high profile trade, right? Because it has violent swings throughout the day. It is very volatile, right? Very volatile stock. So the ideal of taking that trade here at the top of that resistance, because that indicator there told you unequivocally rejection, right? Again, like I know all the fellas in the house tonight. We don't have any sisters in the building tonight. Well, thus far, of course, they come on, but y'all know it was like some point when y'all got a hard rejection, when you just thought you was that man and you been eyeing, maybe something nice, and you got one of them hard rejections, boy. Like some of y'all like, but I don't know what that's like, brother. Boy, watch out, bro. Watch out, boy. My macaroni strong, boy. Look, it's the same reality. It could be, one, it could be, a job, whatever. Y'all get my point. Just any kind of value of a hard reversal or rejection, so to speak. Herein lies what that will look like on a synonymous fashion when you look at a chart. Clear as day. I mean, pinpoint accuracy. Pinpoint accuracy. None of this like you see right here. So this one here actually pierced through it a little bit. This guy right up here. Y'all see me, tracking here on my little color here. That guy there barely pierced above it, right? This guy here, same thing, barely pierced above it, right? But even though y'all know when we see things like that, we still know that that's a rejection. Now this one here, even more so, right? Look at the wick on that one. It came and hit the top end of our channel band here that we already had, and it blew through that 20-day moving average. Now this is just a 20. This guy here, right? This guy right here, I mean, it pinpoint accuracy here. Pinpoint rejection. In that moment, that was your signal to do what? Buy calls or buy puts? Get long or get short? Or just observe. Of course, if the risk profile is just too much to bear, of course, you don't have to force a trade. Never force a trade, right? In this moment here, that indicator, by all intents and purposes, did its job for the day. It did its job. It's like, what more do you want from me? Right? That Tyrese clip that every time I think about that clip, I was like, man, it got my brother all jacked up. It's like, what else do you want from me? I gave you the signal. Gave you the signal right there. I'm speaking about it. Why? Because I was ready for it. And I still played a smart incremental window here to try to play the breakout into the new trend. Literally, this little small micro circle right there, that's me trying to be feeling myself. Now, of course, I make my entry literally right around about right here on that candle, because again, when the market opened up, if we go to our smaller time frame, we'll see what that looks like. So let's go to a smaller time frame, see what it looks like here, just on GP. Right. So let's do some deductive investigative work. Now it's going to look different, right? Of course, it looks different on the hourly chart, right? Clearly, right? It's going to look different, right? Hold on, got my mouse right here. All right. So on the hourly chart, what does it look like? We got a trend bar up there, right? Now that trend bar was drawn obviously way back, right? But nonetheless, you see what it looks like here, in intraday session. This is pre-market. The shaded color here, this tan color, that's the pre-market. Over here is the after hours, right? Evening session, whatever. Here, it peaked above that trend, again, ever so slightly, right? We know it spazzed up higher than what it's showing here because, we had a high. It seemed from the daily chart, it showed what, 441, right? Well, no, well, we didn't. No, I might have had the candle, right? But basically, it was like 440. We got over 440, right? It was over 441. But it's going to show you where it rested at. That's why this thing is never 100% accurate in that regard. But nonetheless, because I've seen them watching it anyway. But we peaked above it here. I tried to, again, me personally, again, using me as a case study here. I'm up on the at the bench today testifying right now. Like, what happened? You got murdered a little bit there, brother. After now I get murdered, but I showed they shot me, shot my pinky toe off a little bit because I got a little busy, right? And then follow the rules of engagement. So again, my entry was coming in at around right here, right? Right around that point there. And why was I using that point? Because the previous day closing, right? The previous closing, or if you want to use that perspective, of course we closed at 437, but previously before that, we had got up and hit a high of what? We got up as high as like, 430, it was like 439, something like that, 430, 439.54, right? The previous day highs were around 439.50 to be exact, right? So of course, if I see us testing that, 439.50 area, first thing I'm gonna tell myself, okay, if we get above that, if we squeezing above that, that's one thing, right? I'm either, if I take the approach that we're gonna go into a new channel, then I'm at that point. Technically, I'm chasing, but I'm still having a thesis in mind why I'm taking that trade above that momentum breakout. And so essentially that's what happened, right? And let's go to a shorter time frame. Let's do some investigative research, right? Now let's go to the all right, let's do it this way. We'll just break it all the way down. Let's go to the 30-minute. You see what it looks like on the 30-minute chart, right? Clear as day. It looks more pronounced here. Definitely, when you look at the 30-minute chart. See, there you go. There's that 441. It gives you, a wrong readout sometimes. You look at it on bigger time frames on Trader, it's not giving that true accuracy. So we know it definitely squeezed above that 441. So again, 439, right? 54, anything above that, it's all grave, as they say, right? So we open up at 440, 47. So like anybody, you're like, okay, I'm gonna wait to see what it's gonna do because it's typically try to make that little pullback, hesitation pullback. And it did a little bit, right? And then we got back up towards, 439, right? That 439.50 area was my magic point, quote unquote. Again, look what my moving averages are. Now here's where it get interesting again. The same way we look at this 20 moving average here on the daily chart. If you look at it here on the what? On the 30-minute chart, what does it look like? In relation to this space here, let me do like we always do because y'all know where I'm going with this. Some of you all, right? Y'all know where I'm probably going with this here. Because when we would draw our circles like that inside of a moving average at the point of a crest of a peak of that of a pivot of some candlesticks, what are we signaling when we do the stuff like that? Now we've done it so much, it should be like training at this point. What am I signaling when I draw that circle inside of that area of operation right there? Anybody want to tackle that? What's that? What go ahead. Oh, sorry.
Retracement.
Right. All right. All right. That's basically what's going on here with retracement. But when we use our mantras, right? We always say, give our little mantra. We say, what? Moving the averages act like what?
Magnets.
They act like magnets, don't they? I was telling people I had a training session with a guy the other day, right? New guy, right? First time guy. He got some market experience, whatever. Again, the ideal of trying to map the markets out and dumb it down. That's his biggest thing, right? Trying to make it make sense without overcomplicating, right? Staying out of his own head and learn how to put training wheels on the market so it don't be so complicated. And I was teaching him this ideal of the magnet theory. And, instantly I could tell when I was looking at his face, his eyes just lit up like, man, I didn't think about it like that. As much as we know it's supposed to be that way to a degree, because markets are always trying to trend near its closest moving average to the point of showing you ebb and flow stability of markets, right? We all know that, right? And I showed him that, and it's like, man, you just changed my whole world. Same way, like probably some of us when we went through it for the first time. I was explaining it, but nonetheless, y'all know what it's like. Again, it's about being able to gain better perspective. So here, clear as day, we have what? Good separation away from that moving average, that 20-day moving average. Do we not? Clearly we do. Extension. Again, but I'm also playing the variables here. The variables here at this moving average here that we're dealing with here, right? Is that we're dealing with what? We're at the top of a what? Top of a trend change, right? Or top of a channel, right? So top of a channel, right? We're at the top of the channel, right? We are, again, some would say, at the breakout point of what? Old resistance, right? Right? Resistance, right? If it was old resistance, right? Just put old resistance because that's basically the point, basically that, because we've been there before, right? And we're dealing with, momentum coming out of the previous day that was pretty strong. We were flagging, we were basically bull flagging into the what? Into the price action. We had a move like this throughout the day. We pulled back so slightly, consolidate. Yeah, there's your flag pattern, right? And then we carried the market higher. When you had that flag pattern like that at the end of the day, into the after hour session, most people realize what's going on in that moment. They're trying to reset the RSI. Essentially, right? Because, outside of that, look what the RSI was throughout most of the intraday yesterday. If you look down here in my white drawing down here, let me change the color. That way it stands out more prolific fashion. If you see that there, the first thing you tell yourself is like, okay, we were basically overbought the entire day, right? The entire day, it seemed like. So yeah, we were deemed for a pullback. And this is the smartness of market makers. Market makers knew that. They knew they couldn't carry that thing overbought into the close of the bell. And not only that, and after our session, just keep it what? Jammed up to the top high point of the RSI, going into the, the next day, which is a Thursday, which is what? A non-expirational option, day. So no contracts are expiring. So they need to kind of keep people in the game and not want to sell their contracts, especially the bulls, right? Because the momentum was that it was still holding trend, right? Holding trend, right? The trend is your friend. We're speaking about that today. In this regard to trusting the indicators, your oscillators, and your moving average. Now, a RSI is a what? What is a RSI, guys? What's going on? Eva Monica in the building. Shout out to Sister Monica. All right. What is the RSI?
Peace, power, and profit.
Peace, power, and profit, Eva. All right. Happy to see you in the building, right? Ladies in the house, right? They ain't no half step, right? All right. What is the RSI, guys, in terms of an indicator or oscillator? Anybody? What is RSI?
To me, it gives you the notion that when the stock has overbought or oversold, so kind of like don't get in, it's too high, it's going it's not a good time, so to speak, or hey, this might be a good idea because it's it's overbought or that kind of thing. That's how I look at it.
Right, and
like
that's the definitive.
Yeah, it's not a good idea to get in, and hey, this might be a good time to get in.
Right. That's the definitive value of it, right? And that's what it conveys, I should say. I guess I should have asked the question away. Which is it, right? In terms of RSI, is it an indicator or oscillator?
The indicator.
Right. So somebody got indicator. Anybody else? What is anybody got anything else?
I would say oscillator.
So Brandon says oscillator, right? All right. So anybody else? Anybody else?
I'm going with indicator.
I was gonna say I'll go with indicator.
So we got three indicators and one oscillator. Anybody else? Real quick. Anybody else? Anybody else want to get in on this bet right here? We got 10 on 2, 10 on 2, 10 on 2.
I could define that word. Hold on.
10 on 2. We got 3 to 1.
My content and definition might not be right, but
no, it's all right. But this is the part of learning because that's what we talk about. The indicators, oscillators, and trends, right? So we got 3 to 1, 3 trends, 1 oscillator, right? 3 indicators, 1 oscillator. Anybody else, real quick? I guess I'll go look on the 2 real quick, just in case. Even though we don't.
No, when you put the RSI on Webull, you have to go through the indicators. That's why I said it's an indicator.
All right. So okay, just using the basic terminology based upon what you've seen from again flipping through different platforms and just puts it up there. Now it's specific because it's a certain readout, right? So this is a very good point. That's why we're gonna talk about it here today a little bit. So really quick here, let me take all my
isolators are those tools used to help determine how the algorithms and the technicals can be traced or something like that?
Well, because I guess let me pose this way, because I know you just came in the building, but tonight's training session, we're talking about indicators, oscillators, right? What do they signal? And then, trend matters, right? So we're talking about trends, indicators, oscillators, their signals, what their readouts are, how they are working in, and adjacent to what? Price action, buyers, sellers, the whole nine, right? Entry point, exit points, right? The importance of that. And so it'll help you have a more, I guess a better perspective and understanding when you're looking at a chart, right? From an optic perspective, right? And so we know that there's a difference though, right? From an indicator to an oscillator, right? So when I ask that question, like, what is the RSI, right? What is the RSI, right? So, so let's go there, right? Right. So, let's go to, we'll just put oscillator, right? So here's I guess the base case definition of what an oscillator is, right? So anybody real quick want to read that for me real quick up here at the top? Somebody give me some somebody give me some of that good old Hebrew Israelite, sound off real quick here. Can y'all see my screen? Is it showing?
Yeah, I think I can read it.
You got mobile?
Yeah, I think I got it. An oscillator is a circuit in which produces a continuous, repeated, alternating waveform without any input. Oscillators basically convert unidirectional current flow from a DC source into an alternating waveform, which is desired frequency as decided by the circuit components.
Right. So, and essentially, if we look at this, just kind of go straight to the meat, right? Y'all know people read, right? We just go where the meat's at, right? What stands out the most? So what they did to you, they put it in bold print just to kind of get you understanding right exactly what they're talking about, right? It basically is it's a circuit which produces continuous, repeated, alternating waveform without any input. Does that make sense? Is that resonating with you guys a little bit, just from the base case, understanding what the oscillator is?
Sine wave.
Right, like sine waves, right? In a lot of ways, right? Right. Anybody else? Is it making sense, guys? Are you guys with me here? If it's complicated, say so. Of course, we're in training, so this is what we're here for.
But when they say input, do they mean that? I mean, what do they mean by no input? I mean, I understand the wave part, but
so with waveform without any input, that means that there's nothing you can really do to alter. It's flow in terms of using its energy source at this point, whatever the energy frequency is, it's already set. Right. Let's say like to do like a Geiger counter, right? Like when you think like what the Geiger counter that measures the what is it, like the earthquakes, right? A seismic graph or like stuff like that, right? Or a Geiger counter, it's moving like what do you got, like it's like a mercury, some kind of mercury readout thing that calls it whatever. But that's the essential what's happening here, right? It's already set to a pre-standard of being able to gauge what energy, right? To a degree, right? Some kind of form of a current in a lot of ways, right?
Right.
So moving averages can be what? Obviously what? You can input, right? You can change it, alter it a little bit. Make sense?
Right.
Right. In terms, day break. Now you can do that for the RSI from the what they call the default setting, right? 714. You can change that, but outside of that, it's moving in essence to what? Price action, right? So it already has DC current. The DC current of an oscillator is what? The price action. What is another form of price action? Buyers and sellers, right? The money flow, so to speak, right? So if we apply this definition here to the RSI, would this be that of oscillator, right? Well, let's see. All right, let's go see what the indicator is, Darren. Let's do this real quick. Right? What is the indicator, right? All right. So let's go. All right, we'll just use this here. All right. They have more a good little prefix one out the gate, but that's all right. We'll use what they got here, right? So indicator, right? So somebody give me that real quick. I know I'm like putting y'all to work like we got to read, but that's what we're doing. We're in training now. Somebody read that definition for indicator for me real fast. Anybody real quick. Give me that definition for indicator. Blow it up too. I know I got this whole.
A thing, especially a trend or a fact. You moved it over.
Oh, my bad. I was blowing it up for you. My bad. Go ahead, Owen. You got it.
Hold on, now I gotta blow it up. A thing, especially a trend or a fact that indicates the state or level of something. Car ownership is frequently used as an indicator of what is that? Affluence.
Yeah, affluence. Mm-hmm.
Yeah.
Mm-hmm. And then number 2, it says what? A gauge or a meter of a specific kind, right? Or specified kind, right? All right. If you come down to Webster, it says what? A sign that shows, suggests condition of existence or existence of something, right? A pointer or a pointer on a dial or a scale, right? So it's just pretty much a what? A readout, right? It's a natural readout. It's a gauge or pointer or something to that regard, a dial, right? In that regard, that you can obviously what? Level, right? You can level it, up or down, or however you choose in that regard, right? So somewhat it's shown in a lot of ways. You can say it's kind of what? Stationary, right? Now on the chart when it's moving, of course, along with time, then yeah, it's it's typically going to try to what? The movements of it going to be ever so what? Directional based upon again what's happening in real time with the price action, right? Now, unless you have a shorter time frame. Now, if a shorter time frame indicator like a moving average, like a 9 moving average, then of course that's going to have more what? It's going to have more articulation. Y'all with me there? Like throughout this movement, when the price action stock is what? Parabolic, when the market stock is crashing, then that moving average is trying to what? It's trying to trill all that what? That volatility. Make sense? So right. This articulation is only in that moment. It's just based upon the price action that is what? It's trailing, right? Right? That's why people call it exponential, right? And then some people like simple moving average, right? That's definitive value even within that. Now, if you take that into consideration, if you think about what we just talked about as far as the RSI, right? The RSI, of course, this down here, of course, in this graph, I should have used different color. When you at the top of that RSI, definitely ain't no blue color. It's gonna be flaming up there, right? In the RSI here, guys, you can see my screen here. Just based upon that definition for oscillator indicator, what would the RSI fall into? What category would it fall into? Anybody?
We're just speaking of category. What are you speaking of? The oscillator indicator?
Yeah, or indicator. Yep. We're strictly speaking about which one denotes what in this essence. Indicator oscillator. Okay, I'm sorry.
Oh, I was saying I was based off what you just gave. I mean, I would definitely have to revamp my answer because it's not a dial. It's not a dial or anything like that, or a pointer. It is a wave format and it is based on input, buyers and sellers. Changes in the market. Unless I'm not saying that right. Unless I didn't evaluate that right.
No, you got it right. It's what we talked about. It's price action, right? It's
right.
It's it's not so much trailing. It's actually front running a lot. Sometimes momentum. What is momentum also known as? Current, right? Energy, right?
Mm-hmm.
Hence, when you look at the squeeze momentum, look at my squeeze momentum that's above it, right? That squeeze momentum is what? It's called squeeze momentum, right? There's the devil's in the details. One would say, right? It's basically telling you what it's doing. It's gauging what? Momentum, right? In that regard, that means is what, if we again go back to the definition for oscillator, if we was to figure out, if this is an indicator or oscillator, which one would this fall into? Fall to squeeze momentum, this guy right here. Would that be an indicator or oscillator as well? This right here. Anybody want to tackle that? Anybody, everybody. Scream.
What is
the volume?
Now, this is the squeeze momentum, right? So this down here, so make sure I get everybody's attention in the right area. So I'm gonna draw a big old arrow, right? This arrow here, I'm gonna draw several arrows, right? Now that's the volume, that little speck down there, but this little big old green thing you see right here, if you look to the left of that, It tells you exactly, of course, what it is. In this case, that it's called a squeeze momentum, right? Now, when we see those little bars on it, those little green bars, now they're called something specific too. Now, again, I'm not going to take y'all through way deep down the rabbit hole, but we'll just hit certain things that matter in this moment. They're called impressions. Same way like a MACD histogram. Those little bars when it's spiking green, when it's spiking, spiking red, those are the impressions, right? You're seeing, from a visual perspective, that you're seeing what happened in that moment. Obviously, it's a trend change, and if it's green, that means it makes it what?
Yeah.
Bullish or bearish. When it's green impression, that makes it what?
Bullish.
Bullish, right?
Bullish.
Look at y'all already know. Like, look at, but you ain't second guess. Like, I think look bullish right there, right? So when it's green impression, it's bullish, right? When the impressions are red, that makes them what? Makes it what?
Oh, bearish.
Right? So from an optics perspective, again, you're not sitting there trying to what? Rack your brain what the signal is telling you. Make sense?
Right.
In so many ways, it's telling you what's going on. And the price action is mirroring the value of what you're seeing actually in the real time in the chart. Look up here, right? And we just used the red when at this moment, the bearish signals here, right? Look at the price action, in that time frame here of that, those red impressions as they began to get what? Bigger on the screen. See right here? Look at the peak point of the impression. Let me do it this way. All right. That's the bottom. Here's the top, right? I know that ain't the most straightest line, but y'all come for me. But y'all get the point. At that peak point of the red impressions, right? Or at least the momentum of the red impression starting to grow before it kind of tapped out or topped out at a point, maybe around right here, until the sell-off is when the impressions are giving you let me word this the right way. It's giving you the signals that this thing is starting to hit what? It's peak what? Peak pullback or peak sell-off, right? Y'all with me there a little bit?
Yeah. So basically,
go ahead.
Oh, I was just gonna think anything high, like high and low trends type is oscillators, so to speak. As that up and down.
Right. And again, in the impressions, as they're starting to proliferate to the downside before they hit their peak point. So at that point, see right there, those impressions all kind of take off at the same time. That's when you kind of hit the peak the peak of that selling or the exhaustion of the demand zone at that point. Look up here again, up here at the top here, the candles, you see it hit what? Its peak bottom right at this candle right here. And then followed up with a green one underneath that kind of caused the trend reversal, right?
Sonny, mute your mic. Sonny, mute your mic.
What happened?
Oh shit.
Sonny. Oh, that's somebody mic. Oh, okay. Y'all know might be going this time. All right, what's going on over Dave? He's in the building too. Shout out to over Dave in the building, right? Shout out to my brother in the building too, right? As well as everybody here, all y'all family, right? So in this moment here, guys, we're talking about indicators and oscillators in this perspective here. A squeeze momentum, a MACD, right? Some people use statistics, right? There's a lot of different things that people use. Again, whatever floats your boat, that's fine. That's what I love about the market, because you get to personalize your liking. Make sense? It's great because there's like a gazillion different indicators. There's a gazillion different oscillators. But now knowing the difference between, an oscillator or an indicator, that's an extra layer, right? That's an extra idea in your head. If you're looking at this chart in real time, all these things are happening and they're moving in real time. You're sitting there like, okay, I see what's going on here. All right. I see the indicators here. I see the oscillators here. I see what's going on here. I see impressions on the chart from the squeeze momentum. I see an RSI that's about to be overbought as well. I see it's starting to taper off at the top, so we might get ready to pull back. I'm going to show you exactly what I'm talking about here. All right. I know y'all like, man, this, all right. Yeah. That brother always trying to come with something. I mean, I'm going to use that same diagram I used for this bearish example right here. I'm going to use the same one over here and show you exactly what I'm talking about. Look at the top of the squeeze momentum at a point when it began to taper off here at peak Peak buying. Now, when you have peak buying, or I call it exhaustion of buyers, what typically happens when you have an exhaustion of buyers? What kind of zone are we in at that moment? Are we in a supply zone or a demand zone? Anybody?
Supply.
Supply zone, clearly, right? We run out of what? We ran out of supply. Ain't nothing else on the shelves, bro. Y'all done bought people out, right? You got to revamp, right? The top of that impressions here on the squeeze momentum showed you when it began to taper off that we was getting ready to do what? Have a slowdown and potentially in buyers. Now, we don't know for how long or how long, whatever. Again, we're just trying to be fortune teller. We're trying to be Miss Cleo all in one at the same time. We look at this on the chart sometimes, but that's what we do, right? We signed up for this. That's fine. We got to trust the process. And trusting the process, it equates to you learn how to what? Use your indicators, use your oscillators, all in unison, right? To make sure you're getting the best readout on what's going on in real time. Does that make sense? Y'all with me here? It's a concert.
Got it.
All right. And you have to go through this stuff over and over and over, repetitively in your head in order for it to make sense. That's why we say what? Repetition becomes repertoire. You got to get used to doing this. You got to get used to seeing it. Now, you may not use the squeeze momentum, you may not use the RSI, you may not use, certain number moving averages, but you may have some of them up there. You may not even use moving there. You might use the Bollinger Bands, the Helsinki cloud, right? Ikimoku cloud, excuse me, the Helsinki indicator, right? All these different things. There's so many different layers. You might use line charts, right? The ladder rung charts. Ultimately, in the end, they're all signaling something. Now, when you layer with certain different optics to give you a better readout on the being able to map out money or the price action, essentially, that's what they're there for. They're cheat codes. Knowing what they are is like what? Half the battle. G.I. Joe moment. Where my G.I. Joe people at? Now, I guess I'm telling my age now. That's all right. I'm sorry. I used to have all the little figurines. I don't know. That's all right. That's what they're. The cheat codes.
Whoop, whoop. I like G.I. Joe.
See, look at that. See, you my Jane, right? G.I. Jane and out. Well, yeah, different Scarlet. They had all kind of little look, all right, see?
all them little people's running all over the house.
Oh, to my little boy, that was man, that was a jump off back in the day, boy. Kids, they don't know nothing about that. But you had to get dirty to play with them toys, right? Get down in the dirt, boy. Build your own little. All right, let me move on. Move on, bro. Move on. But seriously, that's what you're doing here. We hit peak impression on the squeeze momentum, and right at the crest of that, what happened with the price action up here? Look up at the top here where I'm drawing up here. You hit what? Supply zone. We talked about that. There's your supply zone because we ran into what? An exhaustion of what? Exhaustion of what? Of buyers. Essentially, that's what it is when you hit a supply zone. You had an exhaustion of what? Exhaustion of buyers, right? That means ain't nothing else to buy, right? If nothing else on the shelf to buy, what can you buy? I'm asking for a friend. You gonna buy the shelves? Hey, y'all, you gonna sit on that shelf, bro? You go to the manager, hey, let me sit on that shelf, bro. I ain't nothing else I want it back. I got to leave out the store with something. Oh, you wait for them to revamp it. So in that moment, again, coming down to another supply zone, even is relevant to the what? An RSI. Look at the RSI right there. You got to squeeze momentum, MACD, whatever you use, RSI, oscillator, whatever, right? And the whole nine, those are signals right there. Essentially at that moment, now, if you were riding the market from where it gapped up, where it ran from the, throughout pretty much the intraday, and you're trying to figure out, okay, where do I sell? Where do I sell? Now, let's put some more layers to this thing. I want y'all to follow me real quick here. Walk with your brother for a second here. Now I'm going back to one again, our good old gravy baby conversation. What we say, moving averages at like what?
Rubber bands. I mean magnets.
That too, right? So Sister Buttercup got brand new on. See, there she go. Brandon, that's your fault, brother. Brandon, you did that to her with the Bollinger Bands, right? They're like rubber band, but they do too. They do as well, right?
Got her.
Got her. Got him. If moving averages at like magnets, again, another optical what? Impression. Now, this is your own optics giving you the impression. Now, we talked about a squeeze moment impression. We talked about a MACD type of impressions. That's what they are. These little bars, they're called impressions. Look at the moving average here. There's your 20 moving average down here. Now, whether you use a 20 or not, that's up to you. Either way you look at it there, look at that separation of degrees right there. Ooh, boy, look at them separation of degrees right there. Clearly, y'all see it there, right? Are y'all with me here? Right? Let me put some more. I'm gonna draw some triple zeros up in there. So y'all can know exactly what I'm talking about here. Look at that. I'm gonna do it in a way where you say, like a real magnet, like polarity, when they're kind of repelling or just kind of pulling you to it. Look at that polarity working right there. Well, look at that Space Ghost little thing back in the day when they do whoop, whoop, whoop. Them old school cartoons. I guess I'm just all of my little age trip back tonight, huh? That thing acting like a magnet. Is it not? Somebody prove me or help me understand how that doesn't convey a form of what? Attraction. Anybody? How's that not acting like a magnet right now? Anybody? I'm asking for a friend. Anybody? What is our goal, guys? Our goal is to what? To dumb the market down. Put it in layman terms. Make it all make sense. Dollars and cents. Visually, intellectually, right? Mechanically. Your mechanics is you what? Clicking what? Buy, sell. Laying your charts with indicator oscillators. That's all the work you're really doing. Mechanically. The rest of it is done what? Up here. Psychologically and also visually when you're just watching your chart. Look, you guys got to put yourself in that position where it begins to just really just, like, okay, I got to connect them dots. The importance of being able to diagram a chart like this right here in real time, when you're dealing with a marketplace like we're dealing with right now, that's very volatile. And a lot of people kind of like, man, this is like trying to trade, like, like playing double dutch, right? With barbed wire. Like this market is just too volatile right now. And the best advice I can give when markets are like that and you're not used to that is to sit on the sideline. Don't chance it. It's not even worth it. The best thing to do is paper trade it. Get that theoretical what? Lesson. Get that theoretical what? Experience. At least, again, in that moment, it'll help your conviction. Iron out some of the rough spots or, basically give you the signal that you was what? Already what? You were right. That's what this is about. That's why we say back testing, right? So you can front run what? Opportunity. That's the whole point of back testing. You back test to the degree until you get what? Blue in the face, right? Holding your breath, just back test, and then you can front run opportunity from that point going forward at least much as possible. So we say that, in the game of what? Technical analysis, you haven't really made it until you were able to what? Go through how many charts you got to go through? What's the standard, guys? How many charts do you have to go through to make it to get to a point where you can say you got some understanding? Y'all should know this number. It's a magic number. What is that number? How many charts you got to go through?
10,000.
10,000 of them. Ooh, boy, 10,000 diagrams. Let that marinate. Some of y'all like, bro, I'm finna check out already, but I quit. And you do it already in this, again, indirectly, just by what? Flipping through different, stocks throughout the day. And you just, layering all that you've already learned about indicators, oscillators, trends, patterns, candles, price action. And all of it is just giving you a blueprint or readout what you're seeing that you've probably seen before. Again, the market is nothing but a what? One big pattern or one big trend. We say that all the time. You got to get used to seeing it though. Now, you may not know all the terminology to the degree where you can, dress right, dress a joker to death. Like, yeah, I know what this is. I know what this is. I know what this is. But eventually you're going to what? You're going to know what it is. Why? Because the more you, as they say, the more you tinker with it, the more familiar you come with it. That's why they tell you got to put in that chart time. In your free time, you should be going through charts. You should be layering indicators on it, layering oscillators on it, seeing what it looks like, hitting the replay button, letting it kind of play out in a real-time motion. Whatever it is, get used to seeing it from the way that we describe it, and we try to at least convey it to you guys over here, that when we say moving averages act like magnets, we're not understating it. We're telling you 100% exact. The more separation of degrees you have from an indicator, that thing is going to act like a magnet. It's going to pull it back to it. Y'all with me here? We can prove it all day, every day. I can prove it to you all day, every day. Well, some people say, well, how do I determine exactly what's the height of that separation though? Well, the market's going to give you a lot of indication that's going to happen too. Why? Because I just told you, the market is, when you put all these things together, indicators, oscillators, price action, this, that, and the third, candles, all this stuff. It's like what? It's a concert. It's a concerto. You look, y'all got some Beethoven already in your blood. Stop playing. Y'all, but Beethoven, whoever your favorite symphony person is, right? Jay-Z, whatever, I don't know, whoever, Dr. Dre, right? Whoever. When you hear a good, good melody, your eyes are telling you in a lot of ways what you're seeing here. It's the same thing from a technical perspective. You have to get in the habit of what? Trusting it. That's the hardest thing for most people to do, trust in what they see. Ain't that something? How does saying go? Believe half of what? Half of what you see and half of what you hear? Y'all heard that saying before? Anybody heard that saying before? I know y'all have, right? You're just quiet right now.
Yep.
Right? Believe half of what you hear and half of what you see. Why would somebody tell you that? Here's where we go into our philosophy trick bag a little bit, right? Sidebar. Why would they say that?
Repeat the saying.
Believe half of what you hear and half of what you see. Why would someone tell you something like that?
Probably the bias out there somewhere. So you gotta always take those stuff with a grain of salt and do your own and test the theory first, because on your own, because you can't really go off of what someone else did unless it can be repeated, and you don't know that unless you do it, in my opinion.
So trial and error, experience, right?
Mm-hmm.
But in essence, when they say believe half of what you see, as if your eyes are lying to you, right? Y'all know how it is, like, again, now I'm going to get somebody in trouble, not in a good way.
Technical.
Right? Because you say, well, I know I ain't just seen Bobby Junebug in Lauren Carr. I know that was Bobby June and Lauren Carr. Like, look, right? That thing hit the airway, boy. Somebody finna get fried. Right? You know what I'm talking about, right? Now you gotta hope that you saw what? You saw that who you think you saw, in that situation. Make sense? It's about, at least being convicted. You get what I'm saying? You want to be sure, kind of like you were describing a little bit, Sister Monica, right? You want to be certain as much as possible. You with me there? You guys with me?
Yep. Yep.
Now, everything we just described in here in terms of using the indicators, all right, using the oscillators, right? And I'm just gonna denote it by putting the X on here. Indicators, oscillators, right? Everything that we just talked about in this regard, you should be able to, over time, when you've seen this enough, accept the value for what it is and not have to struggle so hard to, again, make an executive decision with your money, in essence, to what it's trying to reveal to you. We know there's still a degree of, go ahead.
Oh no, go ahead, finish your thought.
No, you're fine.
I was gonna say I was practicing some supported resistance and looking in, and I was you had said, I think last week, and I don't know why I never caught on this before, when you always point out the consolidation area and you'll say, look at that money right there, look at all that money right that kind of thing, or if it takes out this area right here, got them, that kind of thing. So I was practicing the plotting my support and resistance going all the way out, that kind of thing, and I was looking at the time when you said you should be able to recognize it over time. I was having an issue with I started trading on the 1 hour chart. So when I went all the way out to the 5 year, I noticed that it put me on the weekly chart, and I was like, so I kept going back and forth. Once I applied, I kept going back and forth and just kind of trying to recognize what the price action was doing and looking at where I was plotting my support and resistance to see if it was picking up the same areas on a different timeline. And I was like, oh snap, I think I'm learning a little something here. Oh, here we go.
Connect
I'm
those
just sorry.
dots.
I just wanted to throw that in.
No, that's connecting the dots. Look, this thing is personal, but it's universal in the same breath. Why? Because like we say this, like remember, like some of you guys when y'all first came in the idea of learning how to do this stuff, and we talked about it, be it through me or anybody else, and you hear people tell you that, man, look, you gotta love this because of what you kind of someone on the even playing field. Most other people, right, who've been at this for a long time. The only thing different, they have more money than you, right? A little bit more extra knowledge, right, from what they experience it. But for the most part, when they cut their charts on, if they have any of these different layers on their chart the same way, look, the only separation between you and them at this point is how you what you understand, what you don't understand. But you're seeing the same thing. So you still have the same advantage as they do. It's about being able to trust yourself to accept what it is by knowing what it is, and then exactly what those things actually are there for and what they're supposed to be trying to provide you in terms of a visual readout. Indicators, oscillators, right? Excuse me. We went through the definition of oscillator, we went through the definition of indicator, and understanding their role in giving you this kind of understanding of what's happening in real time in the price action. Clearly, if we use, again, the way that we set up a lot of our narratives is to help you guys make this stuff make sense to the point where you don't overcomplicate it. That's why we use the different analogies that we use, because you want to, again, dumb it down to your liking, right? Again, moving averages act like magnets. The further it separates from it, you'll know peak value. Why? Because the price action will start beginning it'll thin out. You have your first leg of big candles. Eventually, then they'll end up turning to a succession of smaller candles, right? You have an oscillator that's also saying, hey, we're not at peak point quite yet. Unless something happens in the market, just kind of throws it down. At this point, you stay in the trade. Indicators are there to tell you just that too, right? It tells you stay in the trade until you until it we reverse below that trend. Make sense? Now we talk about trends now. So if we're talking about trends in this regard, let me show you this right here, right? Y'all heard of the saying trend trade, right? The trend is your friend, right? Y'all heard that saying before? Anybody? Anybody heard that saying before? The trend is your friend.
Yep.
T-shirt moment, right? It's basic as it is, but it's a t-shirt moment. Because it's denoting what? A trend denotes what? Pattern, continuation, right? Consolidation, accumulation, right? If a person tells you to, if I'm saying, like a lot of times I'm posting, like if I'm trading the stock and options and I'm posting like notes and I'm sharing it with you guys in the group, I'm like, this was going on at this point. This was going at this point. Then at some point when I'm posting, kind of back to back to back, one of my notes going to read something that's very universal. What it's going to say? I put this in all of them too. That way I know I'm consistent. Trend is what? Intact.
Your friend.
Y'all seen that before too.
Trend intact. Oh, trend intact. Yep.
Yep. Y'all seen that before. I know y'all have. When I'm posting, at some point within my notes, I'm showing like the profit going up, profit, I'm making back, I'm making money. At one point in them notes, it's going to be what? Trend is in check. Be it downtrend, uptrend, whatever. But I will note that at that moment, because at that point, when the trend is intact, essentially what I'm saying is that that trade is in cruise control.
It's, right. And it's headed a particular direction.
The market, matter of fact, at that point, the market is carrying it, right? Where my Jesus walks people at, right? Right? I'm carrying you, right? And footprints in the sand, I'm carrying you. I got you. That's what's happening. At that point, the market's carrying you right along with it. Here's where it gets interesting. I'm going to show you exactly what that means in terms of the trend. The trend matters, right? That's a part of what we talk about here tonight too. Trends matter. Do they not? They do. Right? Well, one of the more, interesting, what's going on over T-Bone in the building, Brother Snotball in the building, Brother Zane in the building, I feel him a trick of Will in the building. We see him on the YouTube side of things following in, right? Following along on this, Thursday, right? Training session Thursday, right? If we take the approach that the markets are trading like or the market trades in trends, right? Ebb and flows, peak to trough, right? That saying, right? When we speak about it from that perspective. What's also interesting about that, now, I guess, over Rich, right? how do markets trade over Rich? In what kind of ways? I don't know if you're able to crack his mic open, but how do the markets trade, guys? What kind of ways do the market trade in?
Sine wave.
All right, over David got it, right? Sine waves, right? So if the markets are trading in sine waves on average, right? A healthy market, or at least a healthy market. Let me show you something as well. See right here? Now follow this little fuchsia color line or pink line, whatever you want to say. I know it's jumbled up because I got all this stuff up here. I'll show you a little bit right here. All right. Let me get that brother Al in there. All right. Now, mind you, this is not following the price action in real time. I'm just drawing you what from an optic perspective, what that will look like, you know, on an even keel, right? Of price action on a bigger sine wave, right? Coming off of what? A bigger time frame of a visual, so to speak. Do y'all see that little pink color line here, or whatever color it is? You want to call it bubblegum color line, bubble color line?
Salmon.
Right, that's right. You know what I'm saying? Salmon color, right? Look what's happening in that moment here. What do y'all see right here? Clear as day, y'all see that what? That sine wave, right? You see a what? Peak to trough, what? Read out here. Do y'all? Anybody having trouble with that? Anybody unsure about what we're talking about here? Anybody? Anybody unsure? Therein lies what's going on right here as far as momentum. In a lot of ways, again, dictating even what the squeeze momentums are doing. These oscillators are also reading out the same thing to a degree. Now, it's not going to be as fluid as what it looks like when you draw it on a bigger picture, but it's still showing you that jaggedness of it. Like right here, like literally, you know, down here, what color can I use? I wrote all over the chart at this point. Like right here on the squeeze momentum, we hit peak what? Peak impressions. We hit the bottom of that what? Of that what? Sine wave at that point. So that's going to be a what? A trough. There's our trough right there. There's our bottom, our proverbial bottom right there. Right? Here we go. Back to the top again. Right? Here's our proverbial what? Peak up here. How do we also know that? Just not by looking at the chart. Look at the impressions right here. See right here? On the squeeze momentum, these green impressions right here, they hit peak what? Peak point of it, what? Green impressions right there. Trough, peak, peak to trough. The same thing happening here on the way back down. Now, again, we still have after hour session. We got to get through futures tonight. It's not a predictor of accuracy to a degree where it's 100%, but it's giving you what? Probability. As of now, we're still in the midst of this what? This next sine wave, particular to what? To reveal itself. Now, it may not be as, let's say, as pronounced as what we got from the previous 2 days, right? It's because we don't know what the market gonna hold. Why? Because there are a lot of other different things that can what? Cause the market to what? Spin out of control. That's what makes the market great too, because we're trying to also price in what? The variable natures of the markets. All you can do is put together what? A probability, excuse me, formula, and then trade under that understanding. Case in point, really quick here. Now let me see. I ain't gonna be able to get it back at this point. Or let me see if I can save it. I saved it in a folder, right? Saved in a folder. All right. So let me clear it. Just because I have to come back to it ever. All right. Now, taking that, what we got now as far as indicators, oscillators, price action, yada this, yada that, whatever. All right. So on a price action perspective, just using that same understanding that we just talked about here, right? There's our sine wave, right? We're working with the sine wave theory, right? There's our sine waves, right? There's our sine wave, right? Now, it looks like it's getting ready to kind of come back towards what? To the downside. Would y'all make that assessment? Anybody, you know, uncertain about that? Would y'all make the assessment that it might be getting ready to come back to the downside? Anybody? Anybody unsure?
Well, I already cheated because I looked at the futures market not too long ago, and it's looking, I'll let you see it.
There you go. All right, so get all right. So y'all already front running the information. This why y'all about that life. Right, this is what I wrote. This is why I wrote with y'all. Now look here. I'm gonna do it in another fashion because we're talking about trends now. We talk about indicators. We talk about oscillators. We're talking about trend. We're talking about it all of it in concert because that's what I want y'all to get used to thinking about it from that perspective. This is just make sure you trust in what you've been trained, to not only realize what it is, but when you see it, you should be able to act upon it, is my point. Now, just on a simple back test, because we're trying to back test probability here, right? Which is weird when you think about it. How can you back test probability, right? How can you back test the future? Let me say it that way. Back test the future. Make that make sense, right? Well, ain't that something to get your brain all worked up? Let's see how we can try to put that into perspective, right? We're going to come on over here, the bar chart. Just one of many different layers, right? Neither any kind of 100% defining instrument or not, but we're just trying to map out money. This is just one aspect of it though, right? Now, typically if you do an MOC, you see what the market on close was like. Was it more people to the buy side or the sell side? That helps. The flow charts, y'all know that's one of the biggest things I kind of really show, a lot of people right out the gate. Get used to looking at that flow chart. Even if you don't know how to trade options, get used to looking at the flow chart. At least you know what it is. So at some point when you get there, it won't be foreign to you because the flow charts are denoting what? People who are putting their money where their mouth's at. Are they not? If that open interest is still in play, guess what? That means it's still what? It's still what? Risk on. And I don't have to look at the futures at this point. I see it already, over David. Goodness. That can only be one or two things. I was already talking about it. And now I'm seeing it. Now, have any of you guys went and seen the future market right now since David already saw it? Have anybody went and seen it yet? Anybody?
Nope.
Nobody had. All right, so we're gonna watch it together. Now I see it right now because I'm on bar chart. Y'all should be able to see it right now on bar chart. You know what to look for, right? What do you see right now on bar chart that's showing you right now? That's moving in real time. People like, look at this stumped right now. Like, how y'all stumped right now? Like, I know that. Come on, family. Where my ballers at, man?
Is it the post market?
There you go. Come on now. Come on, guys. Use them eyes. The whole thing we've been talking about tonight as far as training is learning how to trust your visuals. Now, all of a sudden, as soon as you see it, Joker's still up for like, I don't know. I don't want to jump out there. Y'all know how we work over here. We family, right? This is about us learning strategically together. Don't you dare take the approach to be all quiet like a mouse. Look, you're going to get this work. One way or the other, you're going to get this work. So you might as well get used to doing that. When we're in workshop mode, let's go. Unless you can't open your mic because you have family and kids near you. But instantly, looking at this chart now, always look at something. I'm going to use one of my favorite quotes that I got from one of my professors when I was in Atlanta. All right. Matter of fact, this lady was a mayor. She was the mayor of Riverdale, right? And she was a registered nurse at Grady Hospital in Atlanta. And she was a mayor in Riverdale, and she was a college professor. Black woman, too. Black sister, right? Grandmama type. And she's like, I'm finna give y'all some good game, right? Y'all just look, y'all here for this, whatever, this, that, and the third. But a couple things you got to always remember. The first thing you do upon entering into any environment that you're unfamiliar with, what is the first thing you're supposed to do when you walk into any environment that you're not familiar with?
Observe.
Exactly. She said, the first thing you do is read the room. Don't open your mouth. Don't you say nothing. Read the entire room. A lot of that is based upon what you visualize, and also you reading the room about what you hear in the same breath, right? In this case, we're using our optics, right? We're reading the room based upon, if I come onto this chart right now, a few things gonna stand out besides the advertisement right here, right? Talking about somebody get $200 in stock, right? That's why it's big and bold up there.
Yeah, I'm gonna sign up for that.
Right. See, you already on. Don't do it. Already. No, I got you. No, but seriously, the first thing you're gonna do is what? You're gonna read the room, you're gonna start seeing all the different moving parts. And in this case, when I ask that question, what stands out to y'all right now? Because over David obviously mentioned the idea of something is happening right now, right? Now, something major is happening right now. I almost could tell you what it is because we already talked about it. We was already talking about it. Look what's happening right now in the market. What's happening right now in the market right now in the after
Market's down. It dropped.
Not only is it down, but what is it doing?
430. We're below the 430.
That means it's dumping. That means if you're down a whole percent in after hours, something major is happening. Why? Because the future markets are trained to what? To be stable much as possible. Make sense? What's the variable out there that we're dealing with right now, guys? The biggest elephant in the room is what?
War.
Right, war all day, every day. So it got to be some tied to what?
Comrade Putin.
Comrade Putin already, right? Hungenstein, don't make that inner German come out in me. So while we sitting there talking about this front running the idea of what that sine wave may look like, now the sine wave actually still up on the screen, ain't that something? Now look at, I'm not saying I'm a seer, right? Or oracle. We leave that to our sister, our sister Shanique. But y'all know what I'm saying here. We're being paid to learn how to back test probability. In other words, we're trying to figure out how to back test the future. It ain't always 100%. That's why the market, this is not an exact science. It's just about learning how to read and understand risk. Now, I don't know what's happening. I can assure you the headlines are probably blowing up somewhere because the markets are telling you right now something ugly happened or something going on right now, right? Something happened because the market is dumping, right? The markets are rarely down near 2% in the future market unless something major happen. So again, we use the same mentality I was talking about there when I posted notes in the group. I said, here we are at the top of the trend. We've got a new trend alert. It's either going to break out or it's going to be subject, it's going to pull back because either way, we're at the top of the trend. Now, if you have bad news at the top of a trend, that only exacerbates the move back to the downside. Make sense? That's the part of the market that's magic. Why? Because as the saying goes, it's timing is everything. Y'all heard that saying before? Timing is everything. I'm sure y'all have, right? Y'all just being all modest right now. That's fine. Timing is everything sometimes. We were just talking about the ideal of catching the pivots, right? Peak the trough, right? We're gonna peak the trough, right? That's what we talk about that a lot. Peak the trough, right? When you get used to seeing that stuff a lot, you start saying to yourself, okay, all right, I see what's going on here. This makes sense. Let's go over Jermaine in the building. Shout out to over Jermaine in the building. Ober Rover just came in the building as well. My blood brother in the building this evening as well. Happy to have him here. Ober Al in the building. When we get used to seeing those things happen or unfold, what are you telling yourself in that moment? Okay, this can get real. Get real. This could become a lucrative moment somewhat, right? Because again, you caught the market at the most opportunistic perspective. Now, if I just use the same sine wave that's up on the screen right now, this yellow line that y'all see, right? That came from Trading View. If you look at this just from understanding what this really denotes in terms of a sine wave, right? We talk about peak to trough, right? Here's your trough. Here's your peak, right? Now, when we talk about the bell curve or the money, they call it the money curve, right? Or the capitulation curve, or however a psychological curve. The opportune time to make the most money is always going to be trying to go long the market. When the market then bottomed out, you had a demand zone. The RSI is sitting at dang near 30. The peak impressions, the red impressions on the squeeze momentum, excuse me, or hence MACD is showing you red and it's starting to tape off and starting to round out a little bit. The first thing you tell yourself, my risk profile now puts me at a good risk versus profile back to the upside, clear as day, because you've already hit that exhaustion of buyers at that peak selling point. Mm-hmm. It's the same for a buy point. Mm-hmm. Now, as unidirectional traders, right? Y'all know what I mean by that. We are unidirectional traders, even if you're still learning and you haven't really jumped out the porch yet. But at some point, you will become that, meaning you're going to be able to trade the market in both directions, up and down, right? Short selling, buying long. Now, in most cases, we short sell by using puts. Why? Because we can manage our risk better as opposed of a naked short by buying puts. That means we have a finite value that we could potentially lose, right? It's a net It's a net debit, right? A net debit tells you that whatever that comes out that debit, that's all it is, right? You either gonna go dolo with it, or you gonna you gonna hit, knock it out the park, one way or the other, right? You can't lose no more than what was debited, so to speak. That's the value of the put, right? And the same for the call too, of course, if you're doing a buying premium outright. But nonetheless, peak point of profitability always comes at the point of what? If you can, find those points where the market is pivoting pretty hard, that gives you the better readout. All right. Now, saying all that after we just kind of got the surprise that something's happening in the market right now. Well, obviously in the market, but something's happening right now with the, Russia scenario possible. I'm just, look, I'm just guessing. That's what it is, right? Whatever, right? Moving on. Now, we was going to back test the idea of what that may look like for us to what? The option flow chart. We were already headed there. Now let's go right over here and let's see. As the saying goes, I wrote a song about like here it go, right? Calhoun tubs, right? In living color, right? Old school with it. Let's go see what put the call ratio is. Anybody want to take a guess what it may look like before we get down there? Anybody want to take a guess at the put the call ratio, what you think it may look like? Because this money is already recorded, meaning it's already in the books at this point. It can't be altered no more than after 4 p.m. Anybody?
Puts, higher puts to call ratio.
All right, so Rich going higher put the call ratio. Anybody else want to get in on this dollar bet? I got a dollar, hot dollar.
2.5.
Right? You saying what now, over David?
2.5.
Put the calls. Which one?
You on the
calls
puts.
to puts?
We're going with puts.
You want puts? Okay, so puts, right? So we got puts to call, right? 2 puts to call ratios on the put side. Anybody else want to jump in this here? Anybody else? Anybody else want to jump in this here? This hot dollar bet, right? With the side of the dice game, right? Right? Side bet. Anybody want side bet? Okay. Let's go see. Now I haven't checked it now. What do y'all see down there? Let me blow it up a little bit too.
More puts than call, 1.26 put to call ratio. No, that's volume. Yeah, 1.5.
Yeah, that's what it is. That ratio and the volume, the same thing, even the volume and the open edges. So kind of neck to neck, but again, puts edged out. So obviously over David said what, 2.1, right? Kind of same to a degree in that regard, right? Quarterback value of it in this regard, 1.25, right? Or 1.26 if you want to say that. But again, no more than 70 plus contracts. 170,000 contracts. Let me put some respect on them contract name, because that's a lot of what? That's a lot of money, right? 170,000 contracts, that's a lot of money. And we can see the concentration where that 170,000 volume value will look like on the chart when we go up here. But that's important too. Why? Because we're trying to find a what? Deviation, a mean to the reversion. At the point where we're talking about that sine wave, where is it all allocated at? Is it at, a price action pivot point that we've already mapped out at some point and say, okay, the market seems to be kind of hovering at or around these different prices. So most people must be buying at those nexus points. Apparently that's what it's going to end up being. Now look at the put to call ratio on the open interest. 1 million on the put, 1.1 million obviously, and 700,000 on the on the calls. That means most people have already taken their They've already taken their profit off that that bottom pivot move that we talked about before, right? No secret there. When we pivoted off that 420 up into the 430 handle, 430 to 440 handle, that's why the new resistance became 440, 438, 440. The new support became in this case, 430 on a shorter value. So even though it pinged around 429, 428, but 430 became that universal whole number support. And they were just playing in between that 10-point channel. That's why I say, learn how to put the market in a box or a channel. I call it the kill box. You put the market in the kill box. Look, you go in there with your little contra gun. Y'all played contra back in the day, and you just spray up the whole entire board. You can make this stuff as fun as you want it to be, guys. You got to be able to accept, again, that what you've been learning and training on your own and in moments like this, accept what you see. Also, you have a degree of threshold risk variable that you have to put on the market too far as breaks, right? Stop losses, trailing stops, whatever the case is. But for the most part, if your conviction leads you to a particular trade, look, trust the things that you've been training to learn how to do. and use to your favor. Indicators, oscillators, moving, again, trends, patterns, candlesticks, the whole nine. That's what this stuff is about. It's repetition, and it's what? Being able to read, again, it for what it is. I said it that way. Excuse me, say it that way. That's basically what it is. Read what it says it is. Now, we're using the flow chart here to kind of also back test the idea of what? The money, right? Back test the future. That's what we said earlier. Now, let's go real quick and let's go see what that look like. Let's go see what the concentration of a lot of that, what money is sitting at right now. Now, for the most part, we know the market closed at what? 436, somewhere around there, right? Around about 436, 435, right? Yeah, 430, yeah, somewhere around there. Now, if the market closed at around that point, do y'all think the majority of the calls or the puts going to be at around that price? Or maybe what? 4 or 5 points off that point? Because we know we're dealing with a what? A channel of what? Let me just put it this way. We know we got a high of 440. We got a what? The bottom channel, right, of what? 430, right? We've already mapped that out. No secret here. That's our channel here. Where is the concentration of most of those puts and calls going to be? In the middle, at the top, or at the bottom? Anybody? Anybody?
The puts probably is going to be at the top, 440 to 438 range.
All right, so puts going to be most at the 430, 448 range. All right.
Yeah, and the calls probably 430 from yesterday.
All right, so on the previous day, right, and expiration date. Now, I didn't scroll up, but just looking at this chart already from where we at, boy, look at that doggone 440. Somebody bought them 440 puts today. Up at around the top. Look at that right there. The opening is sitting at 35,000 contracts. The intraday volume was at 51,000. Right? So they loading up at that 440. Now, when they bought them, that's to be determined. Now, if they bought them at the peak of the market today, like I was showing y'all that what I was supposed to do today, then of course, you know, if was a fifth, we all be drunk. But nonetheless, that's what we do. We measure out probability by being able to assess risk. No harm, no foul. Now let's go. Let's go see what it looks like. All right, let me remove all this, you know, my hieroglyphics off the chart here, right? All right, so we can see exactly what it looks like. Let's go see, right? Let's go. All right, well, let me move this out of the way here because I can't. There we go. All right, so market closed at what price? 435.71, so roughly around 436, right? So let's look at the 436 strike price on both calls and puts. See right here? Because at that moment, the market closed at what? In the money or at the money, right? Whatever, however you want to look at it. Look at the 435, 188,000 contracts. Now, do you think the majority of those were bought at the end of the day, middle of the day, or the beginning of the day? Anybody? Say again, over Brandon. It was around the end of the day. All right. So he says end of the day. All right. Anybody else? Anybody else want to jump into that? End of the day, beginning of the day, or the middle of the day? Majority of those contracts probably were bought.
I'm gonna go with the end of the day.
You can go to the end of the day. All right. So we got a few end of the days. All right. All right. So, and because again, now this is the totality of what was bought off in totality throughout the day. Of course, that's what it is. It's a final readout, right? Because flow charts are what did at 4 p.m. Besides the SPY. Well, SPY goes to 4:15. I take that back. Y'all know y'all can trade the SPY contracts up into 4:15, right? I'm sure y'all know that. Cool. I've talked about it before, but I'm gonna say it again. You can trade the SPY contracts up into 4:15. You can trade it all the way up to 4:15, only on certain platforms though. Tastyworks, TD Ameritrade, the bigger ones. Robinhood won't let you do it because they got an order book, you know, but their order book is gone by what? They sell your order flow. So when their book is closed at 4 p.m. based upon Citadel, whoever they use, right? I think Webull ain't opened theirs up quite yet, is where I could be wrong. I have to double check on Webull. Don't quote me on that one. But for the like Tastyworks, TD Ameritrade, E-Trade, all the bigger ones like that, you can trade the SPY all the way up to 4:15. That's the actual tied to futures market. That's why. But moving on, right? Now let's go look at the 435, 436 on the call side. See right here? 50,000 on the what? The call side. The 436, 48,000 around about the same. And they're 50,000. We'll just say 50,000. Right? Now look right here. Interesting. The 440s, 168,000 contracts bought for the 440 calls. Do y'all think the majority of those calls were bought at the beginning of the day, middle of the day, or end of the day on the call side? 440 strike call. Anybody? Anybody? Were they bought at the beginning of the day, middle of the day, or end of the day? That 440 strike call by with 168,000 contracts at that point. Anybody want to tackle that? Anybody?
Shouldn't it be like the beginning of the day?
You think beginning? All right, now here's the issue. I mean, it's not even really an issue, but here's the prognosis with that, right? If they bought them at the beginning of the day, they would have had to what? Ride the market for ever so slightly for that small pop, because I know you just came in too, but the market hit a high at the very beginning of the market today, right? So let's go there real quick. See right here? The market hit its high, right? Literally within the first 30 minutes of the market, right? From 9:30 to 10 o'clock. Y'all know that's my favorite strategy, right? My 9:50, 10 o'clock pullback strategy. But that thing trusty and rusty, boy. That thing always get it in though. That's my favorite little strategy. Look right here. We hit peak high of the day during the first 30 minutes of trading, 441.12, right? That's what it printed at, obviously. So if they was buying that, a majority of those calls at the beginning of the day, that means they had a small margin of error to make profit, right? Because the market opened up at 440.47. It hit a low though. The low came at 438.95. Now, if I have to go through a smaller time frame to see exactly how that played out. Did it kind of instantly pull back out the gate, or did it just rocket right out the gate, go to the top, hit that resistance, then pull back? We can see that by going to smaller time frames, right? But ultimately, you would say, in that moment, you would have to say to yourself, okay, well, they had a small window to buy those 440 calls out the gate, because they were thinking the market was going to rocket, because the trend showed you a U-shaped bottom coming into the market, right? Obviously. So there's a small margin of window. I was one of those guys. Speaking about that, I was one of those guys, but I was strictly trading it on a scalp basis to say, if we're going to break into a new trend, meaning a new 10-point window, right? From 430 to 440, 440 to that next 450 channel, then today was going to be that trend reversal if they was going to do it. But I repeat, the caveat was you have to get through a lot of different variables for that to happen. Number one, you got to be able to close above 440 at the end of the day, but we don't know that at the beginning of the day. We're going to assess it by what's happening in the beginning of that move, meaning you have to have certain candles, certain price action values that's happening to give you, as we know in a lot of ways, a lot of fighting and accumulation to get above that 440 and trade above it much as possible, at least close a candle above it. This 30-minute candle didn't even close above that 440 trend line. Instant weakness right there, right? That's a signal right there in itself, right? Beyond the moving average at like magnets, another signal right there, because we were already extended coming into it. So that's why it really mattered at that point that we really have to bring the pain. They had to bring the pain, right? Meaning the bulls have to really bring it if they really want to get outside this old box to get into a new box, right? Bring the pain. They failed. So if they bought those 440 calls at the very beginning of the market, what happened to them? They got what? But Diamond Dallas paid. They got DDT, right? They got DDT.
Dropped.
Right? Because now you would have to say yourself, what's my threshold, my pain threshold? What's my stop loss, right? What am I willing to lose, right? With these contracts. At this candle right here, you already bottomed out around here. You say to yourself, okay, if we're going to get a bounce, I'm going to test it. If you even held that long down there, you had to take the approach that, guess what? If we don't bounce here, of course, I'm going to be in trouble, right? This is the second hour of the market here, right? Or excuse me, this is the second half of the market hour, or within the hour of the market, these 30-minute charts. Now you just Now you'll be holding the bag at this point, right? The next candle here, that was really what the telltale signal, because look at the length of it. It just really plummeted. And it ran all the way back to that mean line, right? That reversion, right? Right back to that mean line, that gun line. Tell them about the gun line, boss. That's that That's that halfway mark. That's that 435, 434 area that we was talking about, right? So they just played off this pivot, you know, like a surgeon. And that's what I was looking to do today. I had that in my mind. Barring the fact that we don't break out and make a new trend, I was already telling myself, okay, if we have weakness here at the top of this, you know, at the top of the trend band here, we can't really solidify ourselves by, you know, breaking out above it and making a new trend here, making a good, at least a stand, then yeah, the pullback is going to come. So I'm just trading the what, you know, like I typically do. I trade what? Peak to trough. I dumb the market down. This stuff ain't rocket science once you realize it. Of course, you know, I'm not saying I'm an expert, but I darn sure well put in enough energy and enough time and enough studying to try to be able to map the money based upon just basic rules of engagement. I don't try to do anything more than what I've been conditioned to accept, even though I know I have wavering moments where I will, you know, I'm always going to learn something. But in this moment, if it ain't broke, you know, don't try to fix it. The same stuff that I've been thinking about, or I think about, I share it with you guys when I come on here, always, right? Or in the groups. It's the same thing. Y'all might be saying the same thing. Y'all might be saying something a little different, but we're trying to arrive at the same conclusion when it's all said and done. That's the whole point of this. When we talk about peak to trough, that's exactly what we're doing. We're trying to, you know, map out, here's my resistance, here's my support, here's my pivot points. We already know those are major pivot points because we've already put the market into a what? A bubble, right? Or a box, as we like to say, right? A kill box, right? So at the top of this box, let me just draw it real quick, right? This big old white bubble here, that's the top. All right? Now everything inside this towards this green line, this is just the top half of the bubble, right? This is the top half of the bubble, right? Or the box, I should say. Down here's the bottom half. No harm, no foul, right? Right? It's very easy to read the markets when you have these kind of guidelines or grid lines or understanding what the market is doing, what it's doing at that moment. You won't struggle as much. As soon as you see it get to the halfway mark, right? I call it the what? The gun line. Tell about the gun line, boss. If you get to the gun line and you start hitting some resistance, I mean, in this case, to the downside, it becomes resistance at that point to the downside, but support to the upside, you already know what's going on in that moment. It becomes what? A micro pivot. It's the middle channel. The middle of the channel is a micro pivot. The bigger pivots are going to be definitely at the what? The peak and the trough, clearly, right? Not rocket science. This is going to help you guys, I mean, man, in more ways than you can probably even imagine. Whether you do or you don't use it, it's going to help you, trust me. Inside this top half pivot, the top half here, look at the 20-day moving average here. This blue line, that's the 20-day moving average. What is it doing? Once it opened up, it was kind of, you know, down here, kind of just chilling. And then it began to what? Instant start riding to the upside a little bit, right? It got to a place where it crested in the middle, and then it kind of pulled back and went sideways. It played the thing, it played that middle like a what? Boy, like a boss. All day, for the most part. Played the middle like a boss. And in doing so, all it did was give you that smaller readout. When we talk about, you know, moving the average at like magnet, it gave you that same what? That same readout in terms of what we've been trained to do. Look right here. Again, that's the top half at the beginning of the market. It was extended away from that moving average. It was extended away from that moving average. Opposite moving average at like magnet, it pulled it right back down towards it. It surely did. And it blew past it, went below it, and then it got extended down here at the very bottom. The RSI showed you that too. Look at the RSI at the top, overbought. It didn't hit oversold down here, but it showed hit a point where it began to bounce, right? Nonetheless, that's exactly what was going on here. And then you went to make that march back to the upside. So you can't really see it there, but you know, it got extended away from it when it pulled back even far down there. And then it made a trick all the way back up into the top. And then it kind of trailed right at the moving average. In that moment right there, what was the market doing from this point to this point? The market was in the ugliest chop that anybody want to see. You hate when the market is in a choppy setting when you got option. Why? Because what's happening when the market is in a choppy setting? It starts with a T. What's happening to your option? Burn. Theta burn like none other. Boy, you talking about Joker getting sunburn. Now get a theta burn, bro. You talking about gonna hurt your feeling? Get a theta burn. Your money, your delta just sitting there going to like, bye-bye. So the market was in a theta burn. That's what they were doing. They're trying to shake out what? Weak hands on both sides, bulls and calls. Who's going to have that what? Resiliency, right? If you were smart in a way where you're saying, okay, I see what's going on here, because when you're used to seeing it, you know how to read it. You knew that it was going through a chop zone. You know they're finna do a theta burn. You know they're finna try to what? They call it actually theta burn Thursday. I'm not making this up. That's a true rolling Wall Street saying theta burn Thursday. Especially when you have an indecisive market like what we're dealing with. They try to chop the market up, kill some premium, right? Whatever. Now let me back some of the stuff off the chart so you can see exactly where I'm at in this here, right? I don't want to take everything. I want to leave. There we go. At least there. This little area right here again was that what? That revealing area of the market where you say to yourself, okay, here comes the theta stuff. Here come the theta. Here come the burn. And they failed miserably to break out to go test the high. See right there? You almost have a straight line. You almost have a straight line of what? Rejection right there. Again, we talked about that earlier about them hard rejections, right? No, right? Market had a hard rejection there. What? How many times? 4 times. It pinged up against that point, couldn't break above it. It got rejected. Again, Dwight Howard, Mutombo waving the finger. No. Get that out of there. Shot blocker. Let's go. Shaquille O'Neal style. Now, savvy traders would have said, okay, that's mad resistance right there. They can't break out again to get back to tested high. The market is weak and it's going into what? A Friday. And, again, we had these kind of massive bounces throughout the day, right? These kind of, jagged bounce here. At that moment, let me see. I might want to buy me some what? Me some puts. Now, here's where it gets interesting. That's at the 438 area or 439. We call it 439 essentially, right? 439. Let's go see what that looks like on the option flow chart. Just curious, right? And most people, again, $half, whole dollar marks, right? Look right there. That 439, 43,000 contracts. Now, most people, again, $half, whole dollar marks, they probably bought the 440s. They want to be kind of what, deep in the money per se. Who knows? Nonetheless, that whole area there, 440, 30, or 438, 439, 440, heavy in intraday what? Put buys. Until you got back down towards that what? That demarcation line was the midpoint, right? We know that midpoint is what? The 435. I'm not making this up, guys. I'm showing you what the money look like. That's what the money looks like. I'm not making this up. We've already had the guidelines on the chart to show you that. That's the midpoint. That's my green line right here. That's the gun line. I ain't making that up. That line been there, right? I've been through that line. That's what you have to learn how to do. You put the market into a box. It could be a big box, a smaller box. No matter how you look at it, you're going to be able to kind of make the market, make the market make sense to you more and more as you learn how to read these indicators properly. Utilize your oscillators to help you as well, right? And then favor it up against the what? The trend of what the market is doing in that moment. Trends matter. Trends matter. I repeat, trends matter. That's what we're trying to get used to. Trends, patterns, again, symmetry, whatever, right? Even when the market is all over the place, it's the same, understanding at the end of the day. No matter how you shake it, no matter how you try to shake it, look, you're not going to whoop common sense. If you're going to use your common sense in alignment with your, intelligence of understanding what this stuff means, what it's telling you what it is, that's what's going to make you a prolific trader or an investor. Now you're going to get your lumps and bruises. I got one earlier today because I missed the most, like one of the most basic things. I'm calling it basic. Now, not that I'm an expert again, but it was very basic because I knew it was already at the top of the trend. Instantly at that moment, I already had my mind at the beginning of the market. I was going to buy me a gang of puts. I'm not lying when I said I was already saying that. I said, but if we test this idea of these people going to get excited about Jerome Powell maybe kicking the can down the road, if we break into this new trend, since we already at the top of it and we hit it pre-market, I'm at least giving the opportunity to try to retest the high, right? The pre-market high. It failed. It came close, but it failed, right? But the pre-market high was over here at 441.50. We open up and hit a high, 441.12, about a 30-some odd plus cent, differential, close to 40 cents. That's a lot, right? That's a lot, right? That's a lot. But nonetheless, and despite that is, of course, when we talk about option contracts, because it's magnified by 100. But nonetheless, that was instant weakness. Why? Because number one, it failed to sustain the trend. right? It didn't hold at the top of that trend block there, that line up here, this guy right here. Anyway, that was the whole, the whole breakdown of why the market weakness there was just obvious that it was a peak moment. That's when you want to go heavy on put, meaning, you buy what you can afford to, the afford and what you can afford to assess false risk. But that was an easy put by at that moment. But again, just going back to what I was talking about earlier with you, Ro, in that regard, if they was going to buy the majority of that 440 called at the beginning of the market, then of course a lot of those guys got what they would have got throttled, right? And they probably bought them, I would say, at the bottom of this peak point down here when the market pivoted and kind of started showing that V a little bit, right? Because I actually tapped the 200 moving average here as well. That's a small wick right there. That wick right there, it actually hit the 200 moving average too. And it was at the midpoint of that what? The gun line here, this green line, the pivot. So you buy there for, cheaper price, course, out the money. But the idea that you can trace back to the upside, they start probably buying those at that point. And actually, when we crossed over maybe the 20 moving average here, this point right here, and then definitely right here, right? But right here, it was just obvious that they was in trouble because they couldn't push above it. I mean, that thing almost like a flat line, like an iron board there. How many times it pinged here, ping there, ping there, ping there, ping here, fail 4 times, 3 times, 4 times, a lady out of there, straight rejected. Dumped from 439 all the way down here to around about 434, 435 into the close. A quick 3 or 4 point move, a delta at the end of the day with no contract expiring today. That's a quick way to make you a quick $300-400 right there on the back end of the day per contract. And people are buying that 438, 439, what? Put by. How do we know? Because again, we just talked about it. Went to the option flow chart. There it is right there, clear as day. They compiled at around that same area. Right there, see? They just, all around the same price. 40,000, 50,000, 64,000, even down to 37, 437, 63,000, 436, 88,000, then that midpoint 188. That's reading the tea leaves, guys. That's reading the tea leaves. And then the next 5-point window, look at the next 5-point window right there, 142,000 contracts. They bought those literally at the end of the day more, so I can guarantee you. I know they bought the most of them at the majority at the end of the day. I can almost guarantee it. Even though we're still sitting at 435, but they'll think about the bottom half of what? Coming back, retesting the bottom half of that what? The pivot point, the trough, right? That's why it's heavy there at the 430, and that's why it's heavy at the what? Up here at the 440. Now, not as even intraday, but either way, it will be the same on the call side though, right? Those calls at that what? Where we at? 440, right there. See, 168,000 contracts. And the 430s are actually a week, right? Because why would you want, those people still left in it from earlier probably that ain't take profit. Look at that, 16,000 open interest at the 430. Those guys gonna wake up tomorrow, they're gonna be sick. If the market is still pulling back right now, I'm pretty sure it probably did. It stopped. I can't even read it no more because it's after 8 o'clock now. I don't know what the future's at this point, but that 16,000 open interest contract hit the 430 call that's expiring tomorrow. That those people right there, they finna be sick all night long. Best thing they can do is don't cut on the futures. Don't look at it. Go watch a movie. Whatever. Drink your favorite little scotch or whatever. Don't look at the market because y'all already know what it is. Them jokers right there are worthless. 100% worthless at this point. Now, anything can happen overnight, boy. Look, y'all know the markets are crazy right now. The markets are scary, skittish, and out of their mind right now. But as I'm looking at the future market from bar chart, when it was dumping and Ober David brought their attention, and we was back testing. That's what's crazy about it. Man, tell me, man, knock on some wood, but that was a premonition moment or whatever, epiphany moment, however you want to say it, but who knew?
I think this was a real practice moment. Like if we did have where we was trading live, I think this would have been the real practice moment to show people how to swing trade and how to buy it when you see it going down.
Bingo.
Because that was, I've been really practicing since dealing with seeing your winnings. It really inspired me to start really watching the swing, and it's been working.
That's why we talk about this stuff religiously. We try to dumb the market down. That's why we use those terminologies the way we do, because y'all know we already have a different vernacular. We professionals too, don't get it twisted, but we have a way of making things a little bit more applicable and pliable and malleable to our existence, right? Our liking, right? Our swag, so to speak, right? Again, no harm, no foul. That's just how we see the world, so to speak, in a lot of ways. And a lot of times I tell you guys, don't get overly never go overly technical, right? Y'all remember that little movie, Tropic Thunder? Y'all remember the movie Tropic Thunder with your brother there from Iron Man and Ben Stiller in there? Right? One of my favorite movies. What's that saying that Buddy said on there, Kurt Lazarus? What he said? Don't never go full what?
Never go full retard.
Never go full retard, right? Y'all know what I mean, but that means never go overly technical. Why? Because you're going to trick yourself out of a trade. When you hear people tell you that the market is not rocket science, they basically telling you that it's not an exact science, but it's not rocket science. That means, hey, be patient. Let the information work for you. You don't have to work for it. Let it work for you, right? At least because you're still dealing with a variable rolling risk atmosphere. Things happen. How do we know what just happened tonight? We closed at we was at 437 dang near in the after hour session. We was creeping up on 437 after closing at 435.71. You see here, clear as day. We was creeping up towards 437. And then obviously we know we're still dealing with all this geopolitical tension. Something happened major because the future market never really dumps at 1% plus in the future unless something massive has happened. We know that there's a lot of things that's obviously on the books that could happen. Something happened, whatever. Market's down a whole 1 point some odd percent after hours. I don't know where it's at right now. I haven't even looked. I don't want to look till we get ready to close out. Then I'm gonna look, right? Because I'm only saying that because I got some puts. Full transparency.
Me too. Oh, I got 2 of them.
I got some puts, right? Bada bing, bada bong. And they already in the money because they inside that that 435 to 430 window. Now, I'm under the impression, like most people, everything that I just outlined to y'all tonight thus far by indicators, oscillators, and trend. Trend matters, right? Indicator, oscillators, what are they signaling? And then the trend matters. Everything that we've unpacked thus far is to let you see in real time how you're going to back test the future. That's a t-shirt moment too. Well, we have our t-shirt moment, but that's going to go over a lot of people's head. You go tell the average person that, they're going to be like, what? That don't even make sense. That sounds stupid. That's goofy. What do you mean? What do you mean back test the future? Well, that's when you look at them, what that look like. That's just out your pay grade. I'm sorry. You don't understand this here. This outside your pay grade. No harm, no foul, no disrespect. It's just outside your pay grade. So that's a t-shirt moment. Back test the future. That's exactly what we do every day as investors or traders. We're trying to price in risk by what? Looking to the what? To the left. Put it in this future, present time. Look to the left. Measure all that potentiality. And then you do what? Probability what? Bands, bell curves, sine waves like we did earlier. And again, we did the sine wave actually before I even got to the point of figuring out, of knowing what happened with the market, right? Before David tipped us off, of course. But we already drew our sine wave, did we not? We already had a sine wave on the chart. Let me draw it again for some people that might be just coming in the building, right? let me put some respect on this sine wave, right? Let me put some respect on it. Same 30-minute chart, right? This is what we were looking at here. Let me draw it here. Let me draw it for y'all right here. We were already drawing it. And you see where I'm headed at with this, right? Right at that what? At that peak there. At least that's your what? That's your whole what? That's your top half and bottom half of equilibrium, right? Or it ain't gonna be a straight line, but y'all know we're already dealing with the channels, right? Top half, bottom half. If we can't hold the what? The midline, mean reversion, deviation line in the middle, we're going to come down and test the bottom what? Bottom half. Where was the future market bouncing at when we first went to that chart and we saw it? It was bouncing right at that 430. Couldn't make this stuff up. It could have easily overshot it, but we know that's going to be mad resistance there. Why? Because people probably had what, limit orders. They had futures orders right there that people trading it for potential pullback. This is why I love this stuff. Call me crazy, call me weird, call me whatever, but this is why I love this stuff. Miss Charlie ain't got nothing on me. Right? Miss Charlie ain't got nothing on y'all. Miss Charlie has nothing on any of you once you take the time to learn how to earn. When you learn how to earn, guys, that's what this is about, learning how to earn. So it all makes sense. You know, of course, some people say, well, this is hindsight. Well, that's what training and back testing is. It's about, again, back testing the probability of future. And when things align themselves, when the stars align themselves, then that actually is what a conviction. That's your what aha moment. You say, oh, this makes sense. This makes sense. The price action, the flow chart, the trends, the indicators, the oscillators, the price action, the catalysts that are out there, the variables, right? We mapped all of that too. It all makes sense. So that way you can sleep better at night. Your conviction is like, okay, shake me out. That's when people like, shake me out the market then. Take out my position. Because right now I'm finna hold this gun line right here and I ain't budging, right? I'm not moving, right? And that's a meme say, y'all seen that little meme from what was the movie? Wolves of Wall Street, whatever. I ain't selling, bro. I ain't selling, right? You understand what's going on in that moment is my point. So a lot to dissect, a lot to, again, go back and replay. And I know sometimes I talk fast, that's the South, Southern boy in me, but it's the same reality. No matter if I talk super, super slow or super fast, the lines, the indications that we're trying to, again, convey are very, very they're very pronounced. Just based upon what we've been trained to see and accept when we see it. Sine waves. Markets are always trying to move in sine waves. Always trying to move in sine waves. Even though when the market be making V shapes like this all over the place, K shape recover, all that dumb stuff you heard him talk about. At the end of the day, it's still trying to give you that ebb and flow. And sometimes it's going to look like this. That's not a complete, beautiful, sine wave without jagged edges, but it ultimately read that of a sine wave. Algos are programmed to play right at those pivot points. Look at there. Look at the roundness of that. When you hit the top here, when you hit that little area right there, right? And then you just came back into the after hour session at around here. At that 20 moving out where it got rejected at that 437 area. Couldn't make this stuff up. Anything could happen in the futures, of course, but that's just where we stopped at. No harm, no foul. That's all you can, as far as you can take it until you look at the future market. When we did, something happened. Of course, we know something happened and the market just plummeted or whatever. I don't know. But anyway, put's going to be printing tomorrow. They're going to be printing. So in closing, guys, so we get ready to close, get up out of here. The importance of trends, the importance of the indicators, the importance of the oscillators are there to help you dumb this stuff down. It is not. As the saying goes, you could teach a 6 and a 7-year-old how to do this stuff. And we proved it, right? We proved it. Under the Black Millionaires of Tomorrow course, under Dr. Boris Watkins. Proved it. Them kids had expansive portfolios. They traded in the Tonka trucks and video games for what? Stocks of GameStop, AMC, Hasbro, Mattel, Nike. They were buying stocks like that. Activision, Blizzard, buying what they like, buying what they know. Their kids. Extensive portfolios. Now, what's our excuse as adults? Oh, I ain't got time. Our kids seem to be busier than adults. How they got time to get excited about something like this and we ain't? I'm just saying. If we really want it, though, y'all know what I mean. I said you gotta want it, right? But see, the thing about this here, again, like we said, it's a marathon, not a sprint. You got all the time in the world you need to get where you need to go. Pace yourself. Knowledge will definitely bring the power, right? That's why we say that knowledge brings power, right? Excuse me. It's pipe fair. Knowledge brings power. Power equals what? Profit. That's our what understanding. You got to put the knowledge first. That's going to bring you the power. The power is just another word for what? Conviction. Conviction gives you the what? You have the swag to make decisions, right? The executive fortitude to make decisions based. That's going to what? Definitely lead you straight to the profit. Because you're going to do all the things that you're supposed to do right. Eventually, the P&L going to reflect it. Make sense? So, I'm going to leave it at that. A lot of good information there. So, really quick here on the way out, I'm going to do this really quick here. I actually pulled up some excerpts too. Let me get up. Okay. So, just really quick, Bollinger Bands. Let me see where the excerpt I had here. So, really quick, Bollinger Bands, right? Envelopes, same reality, right? Oh, Brother Brandon definitely loves Bollinger Bands a lot. You know, he trades with them. Many other guys as well. Envelopes, right? What is an envelope? Envelope is defined as something that comprises of what? Two moving averages on either side of what? A trading range. That's what an envelope is when it comes to the market. I don't know if y'all knew that or not, right? That's the value. Oh, go ahead. Go ahead.
No, I was going to ask you, so on the envelope where it has two moving averages, is that the one that you have on your regular chart and the one at the bottom chart?
No, this is strictly the Bollinger Band. This is speaking about the Bollinger Band's indicator.
Okay.
Right. So anytime you have the Bollinger Band indicator up, that top band and that very low band, that's the envelope.
Okay.
Everything inside that envelope is the what? Basically the price action, the range, the meat, right? That, like it's like a sandwich, right? You got top piece of bread, your bottom piece of bread, everything in between. What is that? What that good? You got your mayo, you got your avocado, your veggie meat, right? You're like, brother, get on here with that veggie meat stuff, boy. Put me some real meat on that. put me a hunk of bologna on there, some hunk of ham or something. But all the good stuff is in the middle, basically. So in this case, in terms of understanding what the Bollinger Bands are, it's just basically giving you, that breakdown. Like, hey, you have envelopes. It's dumbing it down, right? You have two moving averages, right? On either side of the trading range. One of the moving averages shifted upward, and the other one shifted to the downward, forming an envelope, right? All right, let me blow it up a little bit here, just for YouTube purposes here, and also you guys, you just get you on different platforms, apparatuses, whatever, right? So envelopes define the upper and lower ranges of financial instruments. Normal trading range. A sell signal is generally said to be generated when the price touches the upper trend or the upper end. We talked about that. What is the upper end of a kill box? What is the upper end of a RSI? What is the upper end of a sine wave? What is the upper end of a that separation between the moving average and and the candles, right? When it's acting like a magnet, right? What is the upper end of that? It's the supply zone, or we know it to be affectionately known as a what? What is it also called? It's called a sell zone. Simple as that. It's a sell zone or sell signal. Some people say sell signal, then whatever. Sell signal. Bollinger Bands. Training wheels on the market. Can't get any better than that. And Joker still will misread it sometimes. That's why they're cheat codes. Sell signal generally said to be generated when the price touches the up end of the trader range, and a buy signal is said to be when it's generated once the price touches the lower end of the envelope, that bottom part of the envelope, the trough point, the support point, the demand zone, the exhaustion of buyers, right? Or exhaustion of sellers, a low RSI close to close to 30, right? It don't have to be 30, but anywhere where the RSI is dipping. The squeeze momentum, right? The impressions when they start to hit peak and then taper off. MACD, same way. Same thing. right? The percentage shifts for the security completely depends on the volatile nature of the security. The more volatile the security, the higher the percentage of movement. That's why a lot of people trade the SPY. Why? Because they have high degrees of volatility and movement, especially when the market's in this kind of marketplace, which is very volatile. This is the best time when you can just get it. Why? Because it's giving these wild swings. Now, it's very risky, but it's giving you big peak to trough type of swings. You got to know how to read that properly and thoroughly if you're going to trade it. If not, don't jump out. It's not worth it. Right? So this excerpt here, actually, I'm going to do like always, I'm going to snip it and I'm going to send it out to everybody, right? Because we talk about indicators and oscillators. Not that you have to use Bollinger Bands, but the Bollinger Bands are the most very turnkey, in my opinion, indicator value in an envelope format, as it's saying here, to help people be able to see the market from a box perspective, right? If you can't draw your own box quite yet, your own kill box, use the Bollinger Bands. It's going to show you what it is, because Bollinger Bands act like what? Like kinetic, like basically rubber bands. If it's at the top of that Bollinger Band, it's like a rubber band. It's going to snap back to that mean reversion to the middle, or that what's going to follow, even downplay that and shoot down to even maybe to the lower Bollinger Band and bounce off that. It's just pinging between both sides as it goes throughout the day. Right? If it's very volatile, that is, right? A very volatile market, that is. Right? So you can read through here. You can see, I'm not going to read every single thing because it's late. But in dealing with the Bollinger Bands, these are really great for starters. Right? Even if you've been in the game for a long time, sometimes going back to some of the old indicators, I used to use Bollinger Bands way back in the day. I still use it every now and then on certain charts, different platforms. I mix and match sometimes. Sometimes I roll with what I got. But I learned literally out the gate using Bollinger Bands. Right in the Discord room back in the old days. Sal, Blueberry, them, Mr. Lord, Bollinger Bands, right? This is going to help you out, trust me. And it did. Right? The actual guy that actually invented it, his actual name is Bollinger, right? John Bollinger. He actually got a book. I actually got his book too. If y'all want it, I send it to you in PDF form. Right? But anyway, these Bollinger Bands are great for everything we just talked about today. They're great for that. And the Bollinger Bands actually are an indicator as opposed to oscillator. Right? They're differential, right? Key features of the Bollinger Band, right? Originating at the upper band tends to go all the way to the lower band and vice versa. See how that works? You're just going from peak to trough, peak to trough. Look, they can't get any easier than that. Sometimes it still throw people off because, again, you still got to deal with the variables of what happens in market sometime in real time. But for the most part, that's just part of the risk profile. But it's real easy to guide the market using Bollinger Bands. And when they tighten down, because that's the whole thing too, because they could be in a big wide range, right? And not necessarily even getting near the top or the bottom, but at that point, the kinetic energy of the Bollinger Band begin to tighten down. Then you're going to get to a point where I was talking about earlier. When the market begin to converge on itself, and that area, the accumulation consolidation gets tight, right? Then you're going to end up having a pressure cooker effect. That thing going to release either to the upside or to the downside. In most cases, if the market's in that flag pattern to the upside, it's going to pop and release to the upside, right? If it's in the bear flag and the Bollinger Bands are starting to tighten down, then that means it can get real ugly to the downside. Real ugly. Right? Quick moves tend to happen when the Bollinger Bands contract. There's less volatility in price. It is said that when prices are at the least volatile, the propensity of the breakout is at its highest. That's what I was just talking about. That's when that thing tighten down, them bands get tight, and then you snap that thing, and then that thing pop, 70, 80 cents, 20 cents, $3, $4, $5, whatever, depends on the ATR of a stock. It gets real good at that point. You can time good option trading by watching the Bollinger Bands as well. True story. Right when the kinetic energy is tight, if you whatever pattern is in at that moment, if you say, okay, I think we get ready to break out this thing in a call buy, from a bullish perspective, let me buy me some calls right here. And then, the rest is history. A breakout, the current trend is generally sustained. That's just key features of a Bollinger Band. At breakout, the current trend is generally sustained. So if that trend, I was just talking about that. If that trend is to the upside and the Bollinger Bands tighten down, that trend typically it's going to sustain and give you that bullish propensity to the upside. The vice versa will be to what? To the downside. If it's downtrending, bear flagging, bear pinning, any of those things, it could be just that much to the downside. Right? So very important. Right? Moving average, obviously what? Upper band, lower band, moving average in terms of what? The components of a Bollinger Band. Basically a 20-day. See, that's that good old-fashioned 20-day. Again, that's just me. That's why I use 20 moving average a lot for many other reasons. But by default, it is fixed at the 20-day moving average. Go figure. So 20 days is a good rolling standard to kind of show you what? Trend change in markets. That's why most people use it. Not everybody, but a lot of people. Upper band generally calculated by 2 standard deviations above the what? The closing price of the moving average. Right? Wherever the value of that moving average, obviously closing that in that broad, you got a 2 standard deviations. I actually do that when I do my kill boxes. In the same thing, top half, bottom half, middle line, that's the gun line. Tell them about the gun line, boss. I deploy up that gun line all day, right? Unless the market gives me something else. Lower band, 2 standard deviation below the moving average range. Above, below. Basically, that's all it's telling you at that moment. As above, so below. Right? See right here, diagram right here? Buy signal. See? Market was what? Consolidating for about the top band, pull back, rode the bottom band for a minute, got back to neutrality, made a break up here at the top, became another sell signal because they hit the top of the Bollinger Bands here, came right back down again, right? Tested the bottom band again, tried to make a failed break there, went to the mean line reversion in the middle, somewhere around there, failed, dropped and went lower, found the new bottom here, went back to the middle again. There's that midpoint again. See, that's when you split the market down the middle. Top half, bottom half, dumb the market down much as you can, much as possible. And then you what? Tighten down here on both sides a little bit. That's the propensity to break out, right? In terms of a flag, at this point it was flagging and stayed within a range. Obviously you had what? In this case, you look at it a little bit, you had higher lows to a degree, right? Right? Higher lows, higher low, higher low, still step to the upside, and then it breaks out, propensity to the upside, right? Again, nothing that we're not, unfamiliar with. The more we see it, understand it, it's gonna make sense, right? So sell signal will be the same reality, right? Same reality in terms of a sell signal on the way, looking at it from a downtrend perspective. Now, this is just based upon the words in here. We saw it from different areas where it's buy signal and sell signals, but it's all relevant to where that sell signal is being propagated. In this case, at around right here, clear as day, right? Failed to break out, obviously failed to make a new high. Didn't mean completely even closing the gap here. Even on the gap close, a gap down here, you got midway somewhere around there and fail. That means that's lights out, dead cat bounce style, right? Here, out of there, right there, out of there, right? Sell signal. Right, so Bollinger Band. So again, there's many other too. So I'll get this PDF to you guys, the excerpt itself. If you want the whole book, I can get you that too, either way. So that was just, I was going to talk about that. I was going to talk about gaps a little bit, but a lot of this stuff we talked about in real time because as we talk, we discuss them, right? So gaps, the value of gaps, looking at gaps, the importance of those air pockets in the markets, gaps at the top, gaps at the bottom of channels, measuring the gap, the size of the gap, right? We just filled one at 420 on the SPY. That's why I made a big emphasis on keeping eyes on 420, guys. 420, not the pot stuff. Y'all know what I'm talking about, right? The gap of 420 on the spot. That's why it was a big emphasis on that. And now we see why. So, man, if the market gets ugly, I don't know what it's looking like tonight. I know the aggro's going to cut on at some point, try to bring the market back from that gap down. But if it get real ugly, it depends on the news, boy. All right, we go test the ball in that band tomorrow. Wouldn't that be a treat? But them contracts be up what? Ooh, boy, 900,000 plus %. Let them mess around and go test that 420 tomorrow, right? All right. Well, that'd be well over 1,000%. It'd be actually around about 1,300 when you think about it. Just dealing with theta and all that, whatever. Anyway, so that's that. So yeah, I'll get that excerpt to you guys. I'll put it in the back chat or in email form. So you have that. And then the last one was going to be just charting the trend. It's just me paraphrasing this stuff since I didn't get a chance to do it in real time. It happens like that when we get going. Y'all know how we do, right? But yeah, charting the trend. The trend is your friend, right? Never forget this, guys. Never forget this right here. Never forget that the trend is your friend, no matter Look, trust me, you got to respect this one here, because if not, it's going to make you respect it, or it's going to mess your money up by not respecting it. The trend is your friend, right? Understand the importance of it. Trends are very easy to see on a chart. Very easy. They are. Once you realize how to use, visually look at the chart and see what's going on, they are. True story. Trend depends on your time frame. It does. 5 minutes, 30 minutes, 3-minute chart, tick charts, 133 tick charts, 30-minute, hour, 4-hour, daily. Look, y'all get it, right? We understand it because indicators and oscillators are working in adjacent with that value of a trend. They let you know that whether it is a trend forming or not. It's a prerequisite before a trend happens by seeing what price action starts to what stabilize in a certain value or fashion, be it in a pattern value, bullish or bearish, essentially, right? All in the value of trend, right? Trend is always easier to see what afterward, of course, right? Hindsight 2020, but learning how to map it out before it happens, that's what makes you a whole new different of a trader on a different level. We just talked about that. Learning how to back test the future. We just did that. We did that tonight. And we didn't have to do the hindsight thing. So guess what? Anyway, we ain't got to talk about it. We'll leave that between all of us, right? What we just did tonight, right? What it means to be a trend follower is very important. Why should the trend continue, right? It's always a case, right? There's always a thesis, right? If it works or don't work, you got to be able to map it out, right? All right. The reason of a shorter trend, or the reason for shorter trends, very important. Depends on where you're at in the grand scheme of a sine wave. Depends on where you're in a buying cycle or sell cycle. It all matters, right? You can't overstay your welcome. You might get in trouble. You have to take what you get, move on, right? Right. So again, it's all relevant to understanding the value of learning how to read the trend, right? The trend is seen best using weekly or monthly charts. That's when you want to see that bigger perspective, of course, especially if you're a long-term investor, right? The bigger your investment duration, meaning the goals of holding the stock for a certain period of time, you say, I'm going to hold stock for 5 years, 2 years, then you want to definitely use weekly and monthly charts, because you want to see that bigger perspective. If it's saying I want to only hold it for a month, 3 months, whatever, right? If you got a little small leap, a day, a swing trade, then you want to look at smaller time frames, daily charts, right? Daily charts, 4-hour time blocks, 1 hour possibly. You're trying to find out where you're at in terms of the pattern or the trend that's happening if you're directionally biasedly right. Right? So it's all relevant when you start to make it make sense. And that's what we try to talk about a lot, to the point where it just begin to just saturate your brain. You're like, I can't take it anymore. I'm tired of hearing about a trend, right? Cut the computer off, slam it down, out of here, right? So the importance of the trend is very important. So that's why it was emphasis on it tonight. And we're going to talk about it again and again and again and again. We'll get used to it. Might as well get used to it. It's part of your craft, right? It's the craft, right? This is the lodge of getting money, right? The money craft, right? It's the money craft lodge, right? Y'all finna go before, you know what I'm saying? Go through your little rituals here a little bit here. Learn how to read this money, right? So this is the money craft lodge. So yeah, pay your dues by showing up to get this information. That's all it is, right? Let's go. Let's get it, guys. All right. So again, I'll get this excerpt to you guys as well. Some of you guys probably already have it. I'll make sure I put it in an excerpt form as opposed to the whole book. Unless you want the whole book, I'll give you that too. Y'all know we got tons of these books, tons of them, right? And so that was the lesson plan for this evening that I had in mind. I hope you guys gained something from it. I hope it was, very edifying for us, adding maybe another layer to your skill set, or maybe just reaffirming what you've already been learning and working with. Nonetheless, it's great. Why? Because repetition becomes repertoire. Right? That's what we hang our hats on every day. Doing things consistently, getting on base consistently. That's what this is about. Not swinging for the fence. It's not a holy grail kind of reality here. Oh, you're making the executive decisions with money, with a lot of different moving parts, a la Russia, Ukraine. NATO, sanctions, all this other oil, energy, commodity prices, ripping through the roof right now. Aluminum through the roof, wheat through the roof, corn through the roof, oil through the roof, palladium. Go, y'all get it. Y'all get it. All right, y'all get it. So that's all I got, guys. So again, before we close out, guys, we got any questions here? Again, thank you. Again, everybody that tuned in on the backside, on the YouTube side, we appreciate you guys. Man, look, you guys are awesome. We appreciate everybody that comes through and hang out with us as well when we do our little training session on Thursday. Obviously on Thursday, we're more centered towards, the training session itself, as opposed to just being a regular conversation we do on YouTube. But we appreciate you guys, right? So don't forget to like, share, subscribe. You're welcome here anytime. We're family here. We like to, promote that above all things because it does take that kind of energy, right? We're trying to build something here, right? A think tank in a lot of ways to go after the market. It's not us against each other. It's us against the market. Simple as that. Ain't no chest thumping over here. I guarantee you that. It's all love over here. It's all humble because we're trying to get this money, right? This money that's owed. I put it that way. This money is owed to us, right? So that's why we take this stuff serious. So again, we appreciate you, whatever you can do for us supporting the channel, right? So we thank you guys. So that's all I got. So again, any question, guys, for anybody in the back chat real quick here on the panel here? You guys got any questions before we get out of here?
Like always,
Yeah.
thank you.
Go ahead.
No, I was gonna say, like always, just thank you. Thank you for coming through with the information. Always, thank you.
Humble, man. You already know it. You already know it. Always.
I want to thank everybody on the panel, in the back chat, in the class, everything. Right. Tomorrow's gonna be the most I've ever made since we've been doing this.
Possibly. Don't count your chicken for your hat. Don't count them chicken for their hat. That's one lesson I learned early in the game. Just take it this way, Oprah Sonny. Like, just say, it sure be good if things work out tomorrow.
I'm talking about, I had several different trades with that one that's gonna really, really kill. But
if
tomorrow,
we don't know, we got to get through the night, bro. Trust me, I've been doing this thing for a long time. But these people here, they will reverse this thing and crush all your. You'll wake up in a nightmare out the blue, like, why am I having a nightmare? I went to bed feeling good about my little money. And look at the answer and woke you up like, look, bro, they didn't do it.
Unless that could run up to like 450 overnight. Like, you know what I'm saying? I'm already up 3 before they even close. And I got 2 different contracts that was both up 3 before they even closed. And then so yeah. yeah.
More power. I love it. Right? Get that bag, right? Get them bags. I love it. So no, we appreciate you, Sonny. And again, that's what this is all about. Again, it's community, as we say. It's a band of brothers and sisters coming together to figure out how to plot this money out. So everything we do counts and it has value. And what we talk about here is universal. Why? Because anybody can learn it. Anybody, right? We can teach kids this stuff. So, for what is worth in that perspective, that's why, if people submit their time to sit through these sessions, people come to the YouTube channel to watch us go in on this stuff. Cause, of course, y'all know how the approach I take. If I cut this camera on, we're going to go to work. That's just my opinion. All right. We're going to go to work, right? We ain't going to sit here and just window dress. Like, again, I don't pop shots at nobody on none of YouTube. Y'all know I'm always neutral. But one thing y'all can say for sure, if we cut the camera on and we go live, we're going to go to work. That's simple as that, right? Right, work. We ain't gonna talk again. We're gonna walk it, and we're gonna try to dumb this stuff down. At least try to get everybody on board. At least where we can have a form of unison value of viewpoint to a degree, right? Much as possible. So I appreciate you guys, each and every one of y'all, for that, because again, you submitting your time to be here, you have your interest level to want to be here. At least I could do it. Try to go above and beyond to meet you halfway, right? And we're still peers in this. Ain't that something? Get excited. We're peers, right? Ubuntu, baby. Let's go.
I would like to add something real quick if you got a quick moment.
Yeah, go ahead.
Yeah, true story. I hit my brother up probably about a month ago. And I was like, hey, man, I got like, 20, 25K. Can you help me out? Can you do this? Can you do that? He never told me no. He said, well, let's go over a little training session. Let me see. And now I'm learning. He was like, it's a situation where maybe I can help you, but you'll be better off if you're willing to learn. That way you can always eat forever. Now, I didn't want to hear that initially because I was trying to get in and gamble and get out. But after going through the process of, he put me through 4 hours on the first day. I'm like, all right. I fell asleep. I don't know if he looked back at the video. I fell asleep at least twice. But I stuck with it. Next Saturday, stuck with it. Yeah, on my days on Thursdays when I get to it, I get to the channel. And now I'm happy I didn't do what I was trying to do, because I was just gonna be relying on someone else. Even though as family, you still don't want to, if you got the opportunity and the ability to learn it for yourself, why not? But I just appreciate him taking me through that moment where it's like, you know what, I could help you. You may make some money, but why not help yourself? That way you don't ever need me and you can do it, on your own. So I was trying to get in, make a little quick move, pay some things off, but now this is going to have a bigger payout. So I appreciate you taking that time and not really going along with what I was trying to do, show me a bigger picture. I was definitely looking at it in a quick window, because I actually told him, man, what can I do with about 20K, 25 in 30 days? Exactly what I told him. He put me through 4 hours and it was like, no, we ain't gonna do it that easy. We're gonna show you how to do it for yourself. So I just want to put that out there. Appreciate you, walking me through it, not kind of showing me or feeding me, teaching me how to feed myself. So I appreciate you.
Anytime. You already know it. But I haven't had to go any further. It's all love. And it's always, because again, one thing we do realize, especially as a community university, as I use that term a lot, we're trying to reverse a lot of different things, miseducation, benign neglect, financial illiteracy, right? Right? To be financially illiterate, basically, right? Again, people not really wanting to really, share the game, because most people out there, when they got a little information, they want to what? Hide, hoard it, or conserve it, right? Or they want to charge you, exorbitant amounts of money for it, right? Or whatever the case. It's always like some people trying to leverage something over a person more so than just, really being in a more, accommodative fashion. The one thing I love about the markets, again, just, veggie backing on what he said there, because it's true that, if you want to be in a position where you have, as they say, the rites of passage to move as you choose, then it requires you having to understand all the rules of the road, the rules of engagement, the rules of whatever it is that you're dealing with. And, it's easy to take the shortcut. We get it. But if you understand, everything that, that's needed to be known for that moment, for that lane, for that journey, then you'll be more confident in what you're going to, embark on, right? It won't be so much of a surprise or an anomaly or, obstacles. You've already what's coming. That's worth more, as they say, an ounce of prevention. As the saying goes, an ounce of prevention is worth more than a pound of flesh. Let that marinate. You guys heard that saying like a gazillion times, but it really matters when it comes to the market. Why? Because you're trying to build something here that can stand the test of time. Ain't no time limit on it. Ain't no rules to tell you that you can and cannot, right? Race, color, creed, sex, gender, orientation, midget, humpback, good credit, no credit, education, no education. It don't care about none of that stuff. And you could be gainfully employed day one. And I'm saying that falls to knowledge seeking first, though, before you just jump out the window. But y'all get the point. So it's better to teach a man how to fish than just giving them fish every day. And that's the importance of it. So a true testament, because again, it could be easy. Like, yes, family, you put instantly. Just mirror all my trades. You're good to go. But that if I'm never around, see, then we have a disconnect. That's a problem. I won't feel good at night if I took that approach, right? Because I want people to be able to preserve preserve our opportunity. Because we are working with certain amounts. Most of us is like, no, I want to protect that. So that means a lot, because again, that just shows that, we're taking this stuff serious. And I know it to be true, because I see you guys, when we go live, do these training sessions, you guys show up faithfully, man. When you can, of course, we know life is life, but we have an interest. That's the whole point. As I always say, there's no such thing as permanent this or permanent that. There's only permanent interest. Those interests lead us to the same place. And that's what's going to carry us a lot farther when it's all said and done. Right. So I again, humbled by that. And we're going to continue to keep working and building to do just that, because not just us, but we got babies that's coming after us. Y'all got nieces, y'all got nephews, y'all got, co-workers, spouses. Look, it's the same thing. Pay it forward. Get it, pay it forward. Get it, pay it forward. Because we're not getting this stuff universally as we should. We having to learn this stuff, in passing, by happenstance, by friends of people just mentioning it, maybe just wanting to do it at some point, but just always scared. But once you get into it, you're like, oh man, I should have been, that's the first thing you say, I should have been learning this. Where would I be today, right? Everybody had that say, everybody, right? But that's the good thing about it, because guess what? It's never too late. All right, so shout out to you, brother. Shout out to you, family. Shout out to everybody who, value this information, meaning this craft, not whether it's just coming from me or anybody. I just say, follow the path of the information. That's all I can say. Right. And we're going to go far. All right. So definitely appreciate that, man. Definitely appreciate that 1,000-fold. Right. 1,000-fold. Right. So yeah, guys. So anything else, guys, before we get out of here? You guys have made this day here definitely worth it 1,000%, man. We done came in and cooked a little bit, and now we get ready. Some of y'all probably already ate. I ain't ate yet, of course. But we done came in and cooked, and now it's time for us to sit back and chill, right? What they say, do the Al Bundy thing, unleash your belt buckle a little bit, put that belt buckle on open, and chill, right? we done came in and cooked.
I was just gonna say one thing, because I was looking while we was talking. I was looking at all my puts. And I looked at everybody in the aftermarket, but then I started going through everybody on the chart in the aftermarket, and it seemed like something going on right now.
Yeah, like I say, this is just a good lesson too, because now you get to go backtrack exactly what's going on in the markets that's causing this, right? Meaning, because after our session is obviously closed at 8 p.m., but then you got the futures market, of course, that goes on throughout the night. Then, of course, that's your major index, right? The US 30, US 500, the tech, small cap, VIX, and then, other markets, right? We know the markets are unstable on the Forex side, on the international side, because of the whole Russia stuff. So the DAX, the German DAX, the FTSE 100, which is, British, right? The British pound and stuff like that. The FTSE MIB, right? The Switzerland market, the SMI, the IBEX, RTS, Russia, right? The WIG 108, all this stuff you guys learn. The Ibovespa, right? That's the Brazilian market, right? The Nikkei, the Japan market, the Hang Seng, the Chinese market, the topics, right? The Kospi, the Korean market, all this stuff. Again, once you get used to it, you be like, okay. So chances are the similarities, or as they say, the convergence of markets, or the correlation. If a lot of times, if our markets are down, most times the other markets around the world are down, because a lot of people fall out. But in most cases, it happens for some of our neighbors too, right? If they getting really beat up bad, then if we ain't fighting, not so long, then yeah, we can under that same veil. So, but like we know we are in tumultuous time because of this whole war. So your major catalyst or volatility pivot points in the market is going to be due to what stuff is happening with that. So you don't have to be a war major, what do you call it? A political science major, or a warmonger type of person who just follows wars like that. But it pays to know what's going on at least. So again, this is the only profession on the planet where you get a crash course on everything from every industry living on the planet. You get a crash course on it, whether you like it or love it. Because you got to know what's going on if you put your money into it. Makes sense? It has nothing to do with a little back research on it, right? So you got to love that, guys. It's going to improve your quality of life, not just financially, but the way you think about the world, right? Because y'all know before this stuff was probably like, yeah, it's cool. I catch a little something on the news every now and then, maybe in passing, got an alert, out of sight, out of mind. It don't bother me. But when you become invested, all this stuff becomes very relevant to you. And it's okay to know, because knowledge is power. You can think and move better internationally once you learn how the world works. That's why we speak about it in that perspective, or that tense or pretense, excuse me, right? Global markets, right? Global markets. Make sense? So,
hey, not sure if this causing a effect, but I just clicked over to CNN, and it's a nuclear plant on fire after enemy onslaught fire,
Yep.
a lot of whatever at it. So it's on fire. It's like one of the biggest nuclear plants in Ukraine. So that's a big deal. So it probably creating a lot of scare, not only in
on
that
the nuclear
area,
side,
sure, but in the world, because we're talking nuclear now.
Exactly. I guarantee that's the majority of what's happening. Almost.
And that's FOMO in the market.
Well, it's fear, not just that too, but it's a little bit of both. It's FOMO and it's phone, right? That's another. I don't know if you ever heard of it. I've said it before, like phone, FOLM, fear of losing money. All them jokers that bought them calls again up there at bought like 440 calls going into tomorrow, or bought in up there at that price, boy, they sweating tonight. And we looked at them contracts, so we know, we know some people bought it, right? So, but again, markets are, man, these people will turn this market around. Wall Street has no chill. The market already bounced. I'm looking at it right now. It was down a whole 1.5% day in there. We all the way back down to what?
Hey, family. I'm gonna catch y'all on YouTube. I'm gonna get up out of here.
No problem, Oba. Anytime. You're welcome here.
All right,
appreciate you, Oba, Jeremy. Appreciate your family.
All right, thanks, Oba.
Anytime. So again, that's just the general dynamics of what's going on around on the globe, and those are just current events for us. That's what we talk about in that perspective. They're current events, right? They're current events for a reason, and we follow them just in passing. Set your notification or alert, go on about your life. You get a little alert here and there, you know what it is. So of course, in around I have Bloomberg on most all the time, literally almost all the time. I got Bloomberg on somewhere, especially in these kind of times, right? Because I need to, I'm just trying to stay abreast of things in passing or whatever. But that's just a way of kind of checking your traps too. So it's all relevant. All right. So that's it, guys. So I'm gonna get out of here, guys. I enjoyed this, man, as always, man. This was great, as it always is for us, right? I hope you guys benefited from it. Again, like I say, I'll get the excerpts out to you guys. Some of you guys probably already got those books. We just sent so much stuff out so many times, but we're just focusing on some of the most universal things that are going to be great for you in these times. So indicators, oscillators, again, what are they signaling? And then what trend matters, right? Understand the value of a good trend and how to read it, because right now in volatile market, you got to learn how to slow this market down best you can. If you're going to trade it, you're going to have to. Right? You can't skip it. You can't skip doing that, guys. So, and don't jump out there. Of course, like I said, if you're unsure, your conviction is not there, it's just not worth it. Paper trade of anything, go through the observation perspective of it, get that knowledge underneath your belt, and then come back at it, right? Because we're gonna keep building one way or the other. All right. So that's all I got, guys. So I hope you guys benefited from it. Again, it's gonna be archived on YouTube, as we always do with these sessions. Go over there, check it out, download it, just bookmark it or whatever. So you can go back and watch it again if necessary, if you need to. As always, we appreciate you guys. What's going on, family? Dollar Will in the building. I see Dollar Will popped in the house, right? Over Dollar Will in the building. Our family, everything. Our brother Iora in the house as well, right? All the fam over on the YouTube side. Of course, the brother T-Bone came through today. Over the snot ball in the building, holding it down. Over Zane came through today as well. And our brother Mateo, right? And anybody else that might have been listening and watching in, we appreciate you guys 1,000,000%. Our brother Charles Holland came through. Appreciate you, Charles Holland, for the subscribe, bro. Appreciate you. Our brother Quavo came through today as well. Appreciate you, Quavo. Anytime, family. All right, anytime. And it worked the same for crypto. You're right. Does technical analysis work for crypto? 100%. It's all universal. Technical analysis is just basically being able to map out money using these indicators, oscillators, and trends. It's the same for crypto. It's the same for Forex. It's the same for binary options. It's the same for options trading. It's the whole gauntlet. It's just learning how to price money. That's all it is. Learn how to put levels on it, right? Guard lines, grid lines, training wheels, so to speak. That's essentially what a good technical analysis, that's what a technical analysis reads out, so to speak. All right. So we appreciate you guys over there as well, man. 100%, guys. Y'all already know it, right? Y'all already know it. It's Ubuntu to the grave, right? Ubuntu to the grave, right? I am because we are, right? We appreciate you guys. All right, that's it, guys. So I'm gonna get out of here, guys. Hope y'all enjoyed eating. Enjoy the rest of your eating. Keep one eye on the streets. In this case, of course, Russia, right? And then one eye on what your future, right? So that's what this is all about at the end of the day, right? See you guys on the next one, everybody. Peace, guys. Peace, family. Peace, family. Peace, everybody.